lights in the night. So cold rocket dreams, resilience in the fold. Hedge pressure rising, the charts are bold. DD bands rapping, stories untold. Fire with rockets through your AI. Up we go, reaching for the sky. Every trade.
Check, check. Can you guys hear me? I think the audio crashed on my Check, check. Can you guys hear me? The audio crashed. Yeah, you guys can hear me. The audio crashed on my thing here. Hold on one second. So you can play with this. I don't know if you guys are gonna be able to hear music though. Here, but no see. All right, what's up, guys? But I don't think you can hear music. I can't hear anything. My driver's crashed for some reason. Let me see if I can fix. Let me try something different here. Let me do. What's up, y'all? Okay, let me add a device. Oh, y'all can hear that either, huh? You know, I'm gonna do something really crazy for a moment. Don't go anywhere. What I'm gonna do is I'm going to just exit this program completely, load it back up. I know you guys are gonna hate that. I'm gonna freeze, so let me freeze in like the coolest posture ever. And I'm gonna start the stream over, but I'm not going anywhere, so you don't go anywhere. Okay, ready? 1, 2, 3, I'll be back. It's gone again. Oh, you actually should be able to see me now. However, that's working. It's not picking up any stream music. Okay. Let me try something real quick. Welcome to the stream, you guys. You're gonna have to listen to your own music today. Try to play something. This shouldn't. Is this showing up too? It's not picking that up either. All right. Let me fiddle with the settings really quick. Oh, okay. This would be why. How about now? Okay, that should be all right. Default. Okay. Should be good there. Okay, cool. Yeah, I can hear some music now, I think. It's probably gonna get weird if I start playing other stuff or whatever, but it should be all right. Now, if I did that and I did this, hold on. What's up, guys? Welcome to the stream. Audio got weird for a second there. Hold on. Hold your ears for a moment. This might be really loud. Okay, I guess that's working. All right, well, that's not the normal solution, but it's the solution for now. Welcome back. Welcome back to my birthday week. Live stream, construction project backyard still going on and making money already, and the week hasn't even started. Live futures trading stream #1 future trader in the world, according to the last 2 competitions I've competed in. I've got 2 more coming up. So we'll see how that turns out. If you guys don't know, BDH, some people were like, well, you just got lucky and you'll load the BDH. I'm like, actually, BDH was like 16 or 17 different trades. One of the trades was big. Remember that first trade I made was 50G, but remember that first thing ended up with 77. I traded at least 10 times on that stream for the other 27. My BDH win rate was 94%. 94%. I'd load up the stats to show you guys, but they deleted the account after the contest, so I can't access it. Or else I would go grab it from... I was looking for it over the weekend. I was like, I'm going to post how awesome my stats were. I never did. I never grabbed a screenshot of it. It would have been nice to. And it's gone. And it's gone. Auto-tune Matt. Wait, auto-tune Matt where? You hear me twice? Hold on. You might be hearing me twice. Hold on. You might be hearing me twice. It sounds like I'm auto-tuned. Am I good? Okay. Is it normal? That is so odd. Let me hear myself. I wonder if it's clipping. Should be all right there. Sing along note. Hello. Sing along. How about now? Is that better?
How about now? Is that better?
So I think what happened. Let me double check everything. So over the weekend is where I clean everything up on my desk. And I was cleaning the mixer, and I think I bumped the pitch shifter. The space aliens? Okay. It's better now. I cleaned it way too much. I was bumping it. I think the you guys had noticed there's a button called gender. And you can like shift your gender, I guess, towards the female side. And then there's like a button called, let me try to look at, like if I touch this, I can sound really deep.
And then I can sound like, hey, hot stud, give me your number.
That should be normal. So I think I bumped the button when dusting everything. Everything should be good now. You knew it. She sounded like a dude. Check for the Adam's apple. All right. What's up, y'all? Good morning. Good morning. All right. So I made some trades last night in one account. A trade in one account. I longed on MHP, even though it's not drawn. Let me draw it real quick because I had to redo everything or reload everything. So I have to draw it again. 24,937. We were stalling slightly above it on NASDAQ. So I jumped in on the long. As it was just hovering right here and hovering right here, I just jumped in on the long. Woke up with 4,300 bucks. Right, 6703. Is this guy right here? Oh, that's right there. Okay, so we know that that's there, by the way. So let me go ahead and remove that so it's not cluttering the chart up. So I'm going to just remember it's at the close. Good morning, guys. Friends, I didn't even do the roll call because of the audio sound issues. What's up? Don't forget to like the stream. Let me get my prep work going on here. It's a Monday morning, so I'm a little... whoops. I'm a little behind here. Had birthday weekend, you know, party hardy. Let me make sure I got all my promos here. 30% off trader funds, still there, ETF 70% on there, everything's still the same as last week. Okay. Okay. All right. All right, guys, smash that like button. Okay, I won the BDH tournament 2 weeks ago. I actually have won a couple of things. There hasn't been that many competitions, but let me see if I can find it. Post a picture of it. Yeah, you guys remember BDH first place. You guys might not have remembered. Elite Trader Funding had a big competition. There was like maybe like 1,000 people in it too. It was a big old tournament, and I also got first place. People that go, you lucky YOLO, whatever. Look, there's a difference between getting in the top. I always say getting in the top 50 requires a skill. If you're a skillful trader, you should make it to the top 50. If you're a skillful trader with luck, you should make it to the top 25. If you are a master level trader with luck, you should be in the top 5. And to win is an entirely different level of grand mastery in of itself. To win twice in 2 major competitions I've competed in says a lot about how I handle competitions. Now, again, this was a month-long tournament, and you can see my P&L curve is like this. No lucky YOLO there. Lucky YOLO was the strategy, and it was a chosen strategy to win to BDH, but that's because I'm the grandmaster trader that comes up with the strategy to win. Not just a strategy to win in the top, or be in the top 5 or 20 or 30 or 40, but to win. Ninja Trader competition starts today. However, I signed up too late. And even with my connections at Ninja Trader, I went straight to the top and said, can you guys get me into the first one? And they were like, as much as we'd love to, there's actually a cap. We can't even get you a count if we wanted to. And trust me, Matt, we knew you were signing up. We would want you to, because we want you to help promote this tournament. So you should do the second heat. So the qualifiers, Ninja Trader's having this global competition right now, and Tradeify is going to have a competition, starts on November the 2nd. And then I'm going to delete Matt Kors from the internet on November the 1st. So in that competition. So at this point, I'm doing 3 contests like simultaneously. It'll be fun to see how that goes. But the Ninja Trader one that starts this week, I couldn't get in. I signed up too late. And they couldn't even get me in if they wanted to. I was like, I'm going to help promote it. Can you guys get me in? I'll get some word out there, blah, blah, because, you know, we're partnering with Tradeivate Prop and everything. They were like, we thought you were already in, man. We assumed you signed up because you were talking about it. We would have saved an account for you and everything, but there's a hard cap limit on how the tournament's set up. So they can't allow any more accounts to sign up. And I think that's to prevent cheating, like people signing up with multiple accounts after they blow up and stuff, which does make sense. Does Rocket Scooter work on Tradeivate? No, it just all the information is inside of our software. Unfortunately, you can't put it anywhere else. My birthday is on Wednesday, by the way. So the actual birthday is Wednesday, by the way. But thank you for the happy birthday wishes today, because they saw the birthday celebration over the weekend. Is there a new trade day competition? No, they're the ones that did the Influencer Cup, right? Is that the one? Because they did that, I'm absolutely never going to work with that company. I think that's the stupidest thing ever. To literally have something called the Influencer Cup or something. That's just such a spit in the face of the entire industry. They had like a bunch of just like the small time fakes being promoted by them. It just sounds very desperate and just sounded small time for me. I'm turning 3, damn it. That's how old I'm going to be. Was that the group that did it, right? The Influencer Cup? I'm not sure. Is that the one? Don't quote me on that, but there was one that they had something called, hold on. They hosted a contest and they literally called it the Influencer Cup. And I think that to me is very, yep, that's the one. Yeah, no, because of that, I'm never going to work with them, like ever. Like I'm actually going to say bad things about them. No, I'm just kidding. But seriously, like you can't, you know what I mean? Like this, it's a very, I don't want to promote those kind of people. You know what I mean? The people that don't trade, that just sit there on Twitter and hawk affiliate codes all day and then give them a forum to grow even bigger. I think that's kind of bad form. I feel like you should, you know, pay for marketing like everyone else, get a good influencer get an influencer word out of your mouth and get a good trader to work with your firm or something like that, rather than just say, hey guys, let's have all the influencers compete against you, because they're all the small timers, right? Not the people you don't even know about, but they are kind of annoying because your feed is now littered as like a prop firm sales pitch now from every person out there trying to make a couple $100 a month or something. Your son is starting 3 on Wednesday? No way, Tones, that's awesome. Well, happy birthday to your little man. Yeah, 22nd is a good time to have a birthday. You're right on the cusp, man. Libra Scorpio. He's going to grow up a mix of both, just like me. Kind of cool, kind of weird. I think I'm cool, so don't argue with me, you guys. Kind of weird, kind of different, fiery, but balanced, but a little bit of both, man. It's the perfect, like, zodiac sign for a quirky CEO, right? The Libra skills help you run the company. The Scorpio skills help you get shit done. You know what I mean? That's what I tell people. At least that's what I tell people. Maybe that's not true, but sounds good to me. Good morning, guys. Yeah, I would never compete in something called the Influencer Cup. That sounds a little beneath what we're trying to do, you know? Yeah, the Influencer Cup shows how desperate they are to market, and they got all the small timers to market it. And then I looked at it during the time because somebody says, Matt, you should go in this Influencer Cup, and I was like, ugh. These are people that I sit here and just like cringe at all day long. It's like, I don't want to be on a list with all of them, you know. Your birthday's on Sunday the 26th. Trey, what's up, man? Awesome. We have a lot of October birthdays. All it means is our parents got busy like a couple weeks for Valentine's Day. You know what I'm saying? October. If you are if you're like late October, early November, parents in the pasty did the nasty right around Valentine's. So there you go. You were a love baby. So there you go. 26th. Let's go. October 11th. Your daughter's the 29th. We're a few days apart. 82, baby. Yeah, let's go, right? That's the best time. They call them the Exennials, right? They were the millennials from 1980 to like 1984. It was like after Generation X and then the first part of millennials. So the Exennials are like the group of the millennials that had the first of everything modern. So like the first major video game console that went, there was ones before the Nintendo, but the one that hit like worldwide acclaim was the Nintendo. So we had that. We had the first cell phone. We had the first, retail pager. We had the first internet. We had the first PC. So like the first of everything cool. We were like the beta testers of it. So during our formative years. So, when CDs came out, I was in junior high. What a crazy thing to just have like infinite amount of music inside of a sleeve. You couldn't do that in the 70s, right? You can have like a bag full of tapes we carry yourself, So, in junior high, I'm like listening to CDs. I've got, I've got Ministry and Pantera, and I'm just like walking to class like, and I'm just like, yeah. So, we had CDs, and then in high school, we had the internet. So the first of everything like shaped us every step of the way. Every year growing up, there was something new and huge that came out that we got the beta test. So you're like in 1980s or 1984 baby. By the time you got to college is when you had your first cell phone, probably your freshman year of college. You had a Nokia brick phone, you know what I'm saying? 1980 to 1984. Those are like, call it the Exennials. It's a special millennial brand. And then you graduated high school pretty much right at 2000-ish, So, yeah, Y2K. Yeah, I remember that crap. So, anywho. The contest. How to get in contact with me. Just message me in Discord. Columbia House, free CDs in the mall. I'm pretty sure I still owe Columbia House like $3,000 or $4,000. Because when I was a kid, I used to like sign up for it, get the CDs, and then never pay them off. And I don't know what happened to my mom's credit at that time, but I don't think they ever really collected the money from us because we never went back and bought this. Every once in a while, I'd sign up for and get the free CDs and just never buy the rest of them. So I'm not sure what actually came of that. Did you guys ever do the Columbia House thing? And did you guys ever, not fulfill your obligation of buying the 6 CDs after you got the 5 for free or whatever? You think every kid did that? That's probably why they went bankrupt. Yeah. Plus, I think I had AOL for free for like at least a year because I would sign up under a different credit card of my parents. Once the 2,000 hours would go away, I'd sign up again. Used to steal their CDs. Even Atlantic cell phone was a brick, but probably the best phone you ever owned. Oh yeah, dude, the Nokia. Oh yeah, that thing, the Nokia one I had was definitely great. Yeah, class project in general business in high school. You were too young to sign a contract, so it was unenforceable. There you go. You used to talk trash about millennials, so you realize you were one. Hilarious. All right, guys, I got 20 minutes till market opens. It is a brand new market week. I've been sort of like, you know, drunk and partying for a couple days, so I'm kind of not paying attention to the news. Is the government still shut down? What's going on with this? Clue me in on that. Are we going to get our data coming out this week or what? I've not read the news. Has Trump done anything over the weekend? Doesn't look like he has because the market's staying put. No one even knows. Government's still shut down, huh? Okay. Let's see what's going on this week. Let's check it out. Okay, so Monday. Retail inventories minus auto, that's coming out. Medium. Yeah, so really nothing until Friday. Nothing big. Yeah, nothing big till Friday. Well, all right, let's analyze the VIX. Let me tell you guys, we have a new VIX triple B rolling out tomorrow. Remember that. The VIX monthly expiration was shifted forward an additional week due to the Columbus Day holiday. I made $4,300 in one account last night just buying. Right about here when the Nasdaq was kind of chilling right here and S&P had overshot MHP. It was exactly here I decided to go long on, and then that's what I ended up making, and just took the risk on one account. That's it. You guys know when you open, this is short up SU. SUs are always bullish at MHP. I'll show you what the SUs look like on liquidity map. SU right here, that's the leg number 2 off of MHP, and of course BSU, that's leg number 2 there. So whenever you open in between the two and blue is on top, I long at the orange every time, 90%er. So that was pretty decent. Yeah, so let's analyze, do some more of this. VVIX just absolutely dying out on Friday. So this was an expiration thing, I think. But also, you know, don't discount the fact that we had this. But the way that it looks right now is pretty clean. Now, we're sitting at about 20 for VIX for October. If I were to load up the November contract, is roughly about 2020 as well. Remember that enormous amount of backwardation I was talking about? We were about 2 points of difference between the VIX. This was a volatility thing. I think what happened was I think a bunch of insiders got in on the volatility just on this month, which pushed October up, and November was here. Do you guys remember last week when we showed you November, when October was trading roughly about 22 and November was 20? If you look right here, you can see November is currently trading right about 2020. So we've reset to where we were supposed to be. Why didn't November go up and only October went up? Because of insider trading. This is what you just noticed. So people were just buying. There was some insiders buying one VIX contract to make money right there. That's it. And once the explosion happened, we reset right back to normal. Isn't that crazy? Because I thought we were going to open with like 2 or 3 points of backwardation because November didn't move. November wasn't doing this, by the way, to that degree. It was like at the time, before the big spike up, was sitting there at 2034. Actually, it did go up a little bit. And before the spike, hold on, wait a minute. Hold on, VX. X. VX. V. And X. So the forward curve is actually flat now. Interesting. Okay. Z. 2045. So X, Y, and Z are all flat now. That's interesting. Yeah, because I remember back here, this was trading $2 above the other one. I guess in the explosion, they all went off and then they all reset. So the triple B is going to be about 20 bucks. I'm just saying tomorrow. So we're going to be opening right at on Tuesday night, whenever we open for Wednesday morning, right at the new triple B level. It should roughly be about 20 as long as things don't change right now. But the two contracts are like in harmony with each other. And VIX is just an absolute indicator right now. VVIX is likely to still be high, so don't discount the fact the market can run up off of this. But I think that this was the actual bottom. Whatever little catalyst we had here that saved itself, we still never broke through and filled the gap on the S&P gap up and NASDAQ gap up from last Monday. See how we gapped up here and there's the half gap. That half gap has acted as support 2 different times. I think that's good. And all the bears in the world that were like, we're going to wake up to, you know, market crash on Friday. There's blood in the streets, yada, yada. I think the market just healed itself back to bullish. Unless there's something weird we're not seeing, this is a great sign of things being okay. Unless, again, market opens and people just start dumping the stocks and we're like trading down and trading down and trading down. And this is the start of a big crash. Up to you to decide. I honestly think that this is just going to keep pushing up and up and up and up. So with all things being equal, unless there's something new, this might have been the reversal point. So we'll see. We're going to take it one day at a time. Of course, we are gapping up in the S&P roughly 30 points. NASDAQ roughly 60 points or 50 points. We're going to look at the resiliences right out the door to see if I take that opening long trade as normal. So always, yeah, nothing till Friday CPI. News is pretty light this week. So we'll just keep your ears peeled and your eyes open for Trump talk. I don't know if the overnight trading is wrong. I do the same thing. I go for 40-point S&P or NASDAQ and 10-point S&P stop off of a strong long pivot off of the orange and the blue lines. Every single time, everybody hit that like button. Do 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 do. Your shit is frozen. Maybe you should get a heated toilet. That might help unfreeze it. It also sounds painful coming out the back end. Dad jokes. Trading on the phone is crazy. Yeah. Is Slack's available on Discord? Yeah, he is. He should be. Is there still a giveaway for Rocket Scooter if you spend $1,000? Yes, there is. Next step, income. I couldn't deliver a successful D's nuts joke though. So hi Doc, I butchered all of them. Have a good one though. Have you been to Kenya? No, I already fucked it up. Do you like Kenya? Can you fit these nuts in your mouth? No, but seriously though. The AI, have y'all seen the AI lately? Because you can do like cameos from celebrities. So there's AI with like Bob Ross going nuts and like smashing his painting and talking shit. Like you never hear that guy cuss ever. There was one where he was painting a Dallas Cowboys helmet. He's like, I will just add a little bit of tears to this, a little bit of broken dreams and shattered hopes. There you go. That looks like some failure. That was a good one. Or Mr. Rogers sitting there with Eazy-E, or Mr. Rogers sitting there with Tupac doing D's nuts jokes. See, this is what AI was made for. I take trades on MHP overnight every single time. Yeah, I do. Pretty much almost every time, yeah. Unless I'm busy or something, or the volatility is weird, yeah. So the overnight numbers are not the same as the morning. So here's how it works, right? I got what, maybe 12 minutes to explain. Okay, so in the morning, right, we take all these parameters, all these different things, right? And one of those parameters is actually the open interest, right? And we plug all of this into a calculation to create hedge pressure, okay? That's how it works. Now, At any moment in time, you can take a snapshot of the market and have all this data, and then get your calculation. But OI is released around the clock after the market closes on the previous day. So that night, OI is released by Opera to us. Right? Opera sends us that data, and we use that data to calculate MHP in the morning. So we get the OI at night. Then when the market opens, we grab all the parameters we need and take the calculation right then. However, when the stock market closes between 4 and 5 p.m. Central, when the futures market is closed, we don't have the OI. OI comes out many hours later. So what we do is we guess at the OI based on a real-time open interest model that we create that calculates the open interest throughout the day. And at the end of the day, we have a tally. It's called OI estimate model. So we get this estimate is done in real time. So when the market closes, we have our estimate. Then we run MHP estimate. That's what this is. We estimate what MHP is likely to be at 9:30 in the morning. So MHP, remember, anything related to options is looking for a place in time, a price in time, and a direction how you get there. So we make assumptions on all three of them to estimate what MHP should be at 9:30 in the morning. That's exactly what we're doing. So at 4:45 or whenever time I run the calculation, it's aiming for MHP on a certain path at a certain time in the morning on Monday morning. And it adjusts for all of that. And the idea was what we state is that if the overnight futures price were to stay exactly flat all the way until 9:30, what will the MHP be at 9:30? And it makes estimates for all the other things like Greeks and prices and whatever. Estimate. So we run that estimate to understand what MHP is likely to be in the morning. That way we have a trading pivot overnight. That's what it is. And then in the morning, we calculate the real one based on the actual everything, the actual OI and the actual price. Remember, futures doesn't stay flat. The fact that futures move is why MHP moves, right? So if this were to stay exactly flat and go nowhere, and our real-time open interest model was accurate, we would nail MHP exactly right. But MHP open interest model is just an estimate, right? So the overnight pivots are useful for overnight because they provide high volume. I mean, they're so good at it. Last night's MHP on S&P was 60. What was it? It was literally right there where that volume is. It was 6703. So literally like right here was where MHP was, 6703. I've deleted it because it overlaps with this. But you can see there's the volume spike right here. And then when you broke through it, there's all that irrational volume that comes out of it. What we found was that even though we calculate the actual MHP for the morning, the estimate from the previous night still creates volume and pivoting throughout the session. Somebody in the group noticed that, and then a lot of people started saying, yeah, I'm using the overnight pivots throughout the day and they're fantastic. So why is there volume here even throughout the day? It just leads to the conclusion that other market makers, firms, hedge funds, whatever, have kind of come to a similar conclusion as us, and they're acting there. I mean, that's the only real. Why would the estimate be? How's an estimate good? Like throughout the day. And it seems like other people have estimated real-time open interest in a similar fashion like we have and are just acting there. And that's kind of evidence of that. Like, why would my estimate model be an exact pivot? It means other people are trading there. So other people have stumbled onto a similar solution and probably under lock and key in their hedge fund or something. You know what I'm saying? So we don't necessarily understand why our overnight pivots work in the daytime fairly well, other than people are trading there. So it seems like people at the end of the day have hedged based on this mathematical estimate that they have, which means our solution is the best solution you can come up with. The assumptions we made are correct because you can only guess, within some ranges of what possibilities there are for everything. And it seems like other people have pretty much guessed in the vicinity as well. So it means we've kind of joined Wall Street. Wall Street's elite with their quantitative models, which kind of sounds cool to me. Like Einstein came up with E equals MC squared, and we were also coming up with it on our own as well. Whenever trade crypto or forex, citizen futures, Probably not, because I wouldn't have the same advantages there. I have to have, my strategy requires me to use liquidity maps and all that, and requires something to have options. So unless you have, index options is where the strongest thing is. You have an index as far as a basket of stocks. And the index options, or the ETF options, allow me to trade futures with all these layers of confluence. I mean, it's such a strong set of tools. Crypto would just be one coin and one coin only, right? You can't, like, the fact that the S&P is a basket of something and I can watch the something to see if the S&P is lagging behind what it's tracking is an advantage I have that other traders don't have. Crypto, it's just like trading any commodity. You don't have an advantage in that way. You're just trading technical analysis at that point. Because, Bitcoin is just Bitcoin. It's not a basket of something. You can't do arbitrage on it. It's like, I would have the same advantages. Forex, the same thing. You're just trading a single thing. The equivalent would be like asking me, why don't I trade stocks? Stocks, crypto, Forex would be like at the same playing field. Trading index futures, I've got layers of advantages, right, with all these tools. Great question. So the strategy would not apply. The betting strategies would apply. How I manage positions, whatever, it'd still be the same. I'd have to find a risk interval or something equivalent if there isn't one. I have to find some kind of way to know if the market's broken, if it's irrational, things like that. With overnight, how does the close work to determine which level you take? What do you mean the close? I just trade at the pivot. If you open above the pivot, the moment you open, when the futures market opens, I decide to long at the pivot when I get there. That's it. You can arbitrage Bitcoin, but that's a different kind of arbitrage though. You're arbitraging between separate markets. That's a whole different strategy. Like, you can buy Bitcoin here and sell it in Japan. That's how Sam Bankman-Fried made his money. Buying crypto in one market and dumping it in another. Different kind of arbitrage. Yeah. 2 minutes till market opens? No, 5 minutes, 5 minutes. Does the current liquidity map represent overnight? It does not. I think this current liquidity map is representing the cash value of Friday's close. It just hasn't updated. So I think this was actually Friday's close. Yeah. So it will reset. Do I extract levels from Jex map? No. Jex is a kindergarten version of what we've built. The fact that it would be compared in that fashion is very diminishing to what we built. Jex is on wanna be us. Okay, they just did a lot more marketing. Where Jex and Spot Gamma will be when they graduate from elementary school and middle school and high school and college, then they'll be us. They're still drawing with crayons over there. In those worlds. Gamma exposure map is an absolute kindergarten way to analyze options. It's the most basic way to do it. Grab the OI, multiply it by the gamma, create a histogram, plot it out. The big bumps are supports and resistances, and you trade it for a year, you'll realize you won't make any money. So you can't average all options that way. So instead, what they do is they just create heat maps. I call them exposure or Greek heat maps. They create histograms off of options data and multiply Greeks together and try to create some kind of analysis from data they don't understand. But if you were able to analyze options correctly, you can isolate a single high volume acting pivot from options. That the goal of options analysis is to find volume in the market. That's it. If you don't even see that that's the solution, which a lot of these companies don't, then you don't understand the math. When I looked at Black-Scholes for the first time, I had the realization when somebody was showing it to me, they were like teaching me options. They're like, I use, options, or I use your levels to trade options with them. I use hedge pressure to sell calls off of and stuff. And I was like, I never understood how, not hedge pressure, risk intervals to sell calls off of. This is early before we had any of this. And I was like, so if the market falls a risk interval, you sell calls or you sell puts below that, betting that it tucks back in. He's like, yeah, it works very well. And I was like, so teach me how options work. I was like, I never really played with them because they just sounded like, you know, out of my league, and I just didn't want to touch them. And the guy that I was working with at the time, I was actually training. So like 10 years ago, I occasionally would train somebody on my stuff. I haven't done that in a decade though. He told me about options. I got like 2 minutes left. Anyways, when he showed me what Black Scholes was, I looked at it and my first thought was, hold on. Like if I had papers on my desk, I would have grabbed them and sprinted to the courtyard to go to my office. I was like frozen. I go, I can calculate volume pivots using this math, and that's it. Like I saw it immediately. I was like, there's nothing. I had this like epiphany that I can create something out of that, of the options math, how Black Scholes. I was like, I can derive single high volume pivots from this math. I was like, I can predict things in the market using this math. And I watch everybody taking that math and understanding like a small fraction of it, and jacks and things like that are very lacking in actionability. Nothing against them. They're trying, but they don't have, they're just highly marketed pieces of software that don't really have much usability as far as making trade plans out of. Good for like, you know, geeks like, you know, math geeks that want to see a bunch of numbers and in fact, you know, factor them into their trading. But oh, the ding 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 didn't even go off. Okay, all right, so we are off. Market's open. We are gapping up pretty decent amount with high resilience. This is good. So the market is definitely going to be in a gap and go situation. My question is, do I want to take the long out the door? Just to have one contract, one account. Which one is this? Okay, so this one's good. One contract, one account there. Let's do a couple of contracts, one account here, just in case we run. I just got 2 accounts with exposure right now. Nothing crazy. I'm gonna take the gap and go, essentially gap and go trade. Let me get my map show up here. Ding ding ding. Bell's open, guys. Let's get ready to roll. I started off last night throwing $300 in one of my accounts. Again, now I'm gonna wait for my pivots to come up. I'm gonna probably buy dips if I get them, but I am taking the gap and go situation here. Let me grab that in one more account. I'm just gonna run it, let it ride. Oh, beautiful. Okay, yep. Basically run up to DD band. There are no A+ pivots nearby, so that's just taking the long gap and go 1A. Nice, taking risk on that one. We'll let it ride a little bit. Resiliences are nice and strong. 34 on NASDAQ, 67 on S&P. That's looking good, guys. Don't forget to smash the like button really quick, friends. I love you guys. Give us a little bit of support there. I love it. Let it ride. So somebody said I should mind showing my accounts I'm trading are legit funded accounts. These are Tradify straight to fundeds. I've been trading them left and right, getting payouts left and right. So I've never traded anything else with Tradify except for straight to funded. So that's this. And Funded Next is a mix of funded and evals because I'm constantly building a buffer of funded accounts. So I have most of these are funded accounts in Funded Next. Yeah. Yeah. So with Funded Next, you can pass as many evals as you want. And just have a buffer of them. Okay, perfect. That's about 80 points of run. I like what I'm getting there. Okay, this is, how close are we? Oh, this one needs to make 900 bucks and it's going to cut out on its own. All right, let me take that first set of profit. Let me close that out there. Can you see? 1 second here. Bum, 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 bum. Bum. Bum, 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 bum. Yeah, hold on a second. Here's the proof. These are my 5 Tradeify straight to funded accounts. I'm not if you know the codes, feel free to write that down. That's Tradeify Lightning funded account. All right. Cool. 5 trades of fundeds. Okay. Can we continue? Thank you very much. We get around. This will auto cut at $900. That's the TP I have set on that one, I think. This is that account, yeah. All right, so again, $900. It'll close out on its own. And with Funded Next, so with Funded Next, you can trade up to 700,000 worth of eval and 300,000 worth of funded. And so what I'm constantly always doing is building, like, while they have the no DLL accounts, this is my crazy way of doing this. I believe that Funded Next is not going to have these offerings for long. This is how I believe. I believe that, like, they're offering such a sweet deal to get market share and that it's going to go away. So can I tell you what I've done? I have passed maybe 30 100K legacy accounts, literally 30 of them that are just sitting there that aren't even being traded. I'm fucking stockpiling for Armageddon. This is what I'm saying. Call me weird, but I think that's going to happen. So it looks like it closed it out automatically at $900. That was my profit target. That's good. We're pretty chill on that one. So let me take the screenshot and update that. I'm fully flat in my accounts now. Can you trade one? So let me tell you what is going on with this. And again, this is me just trying to be Matt, being like 20 steps ahead of whatever. All right, so that's where I am now. Took some profit, closed out. Which one is still open? Let's do this one now. All right, so I'm flat. That's a good run. The idea is that the no DLL uncapped payouts are fantastic. Okay, so the idea is I can scale them to millions of dollars each. When they had the first no DLL sale, you guys remember Tyler, right? Tyler and I had like a chat about it. We were like, this is crazy that there's no DLL and uncapped payouts. And Tyler was like, you know, we can scale these things to like $1 million payouts and get famous. We were just joking about it. And I was like, yeah, I was like, you know, I'm going to stock up on these. He's like, yeah, me too. I was like, I'm going to buy as many as I can and pass me as I can. I call them and I say, what happens if I pass more than $1 million worth? They were like, they just sit there in your buffer. You can pass as many as you want, but you can only trade so many at a time. And the no DLL plus uncapped payouts was a limited time only. So all I did was get as many as I could buy and then pass them. The first sale, they only let you get like 300,000 total worth of them, something like that. And then the second sale, you can get up to 1 million trading. So you can have 700,000 eval at a time and 300,000 pass at a time. Now, I think it's unlimited with the new offering. So my belief, is there a reason I don't share your trading screen? This is my trading screen. What do you mean? Every trade that I do here, I'm mirroring in all my other screens. I can't put 14 DOMs on one screen. Keep that in mind. I would if I could have a better way to do it, but I have one Tradeivate here and one Tradeivate there. So anytime I'm in a trade, you will see the trade on the screen. I'm just mirroring it in other screens, other DOMs and other screens. I've got a little tiny bit of real estate for trading. This is the limitation of trade of 8, unfortunately. Yeah. All right, run up to upper DD band. That's the limit I'm looking for. But right, so anyways, with Fund Index, let me tell you, this is my weird belief, right? Is that these offerings that they have are only temporary. I feel like at any moment is gonna be a rug pull. Not a bad one, but like, so guys, we've gotten rid of the no DLL. Sorry guys, we're capping payouts, whatever. I'm grandfathering in. Like I said, I have like 30 past funded accounts just sitting there. And I'm trading my 300,000 worth and constantly just passing as many as I can. Like I said, I've got if they cut everybody off, I've got like a stockpile of gold in my basement, basically. Are you guys following what I'm saying? Does that make sense? So like I said, the offering's too good to be true. There's no way it can last. It's a loss leading campaign. I believe they're losing money with these no DLL uncapped things. So I'm just stocking up on them. If they ever say, well, we're getting rid of this, and I go, well, I've got 30 or 40 of them to keep playing with. I'm gonna continue to pass and get them funded like over and over and over again, as much as I can. Now I've made enough payouts to completely pay for this endeavor, but if Fund Index ever changes the rules, I'm gonna be like the guy that like saw it coming and then stocked up on a bunch of them. Yeah, but Malco, it's not inactivity. Once you pass the account goes inactive. It's not active. So it's sitting there in limbo. Sign the contract. So it's not 1 week activity rule only applies to active accounts. It's inactive. It's no longer an account. So it's in a dormant state. Yeah, as Straw Hat is telling you. So it's inactive. I just don't go sign the agreement. So it just sits there. And the fact that they have no monthly fee is why I pieced it all together. Yeah, so they just sit there. Pass as many as I could. And now they're $200 a pop. Like the sale price is ridiculous. So if I ever blow one up, which was it Friday, I busted one of them. I just popped a new one in. And now this may be a terrible waste of money and resources, but if they ever go under, I'll be the one guy that's got plenty of them to trade on. So, my payouts have more than made up for it. But currently my goal is to get the biggest payout they've ever had in Fund Index futures in America, just to show off. And so I need a stockpile of accounts to do that. Yeah. So I like to have a little bit of fun with this whole trading prop world thing. So I know you guys are having fun watching me do this, but I'm not shorting 243. Yeah, these guys will tell you I'm not taking a short setup from here. As a matter of fact, the idea is, can I take another long setup from here? A pluses today. This is all B setup. So I think it might still keep going. We'll see. B plus setup, which is opening trade, 1A small position only from here to DD band, which is great. This is a 3.6 to 1 trade. Sorry. Yeah, almost a 4 to 1 trade, which is really nice. Nasdaq is almost at its limit though. So because the distance to the first resistance, and remember, the one that says support is if we break through it, then it's support. Which I might change the logic on this one. It says support because the DD band is greater than half. So it's telling you not to short off of it, is why it says no support there. But because it's so close to this band, we're only about 30 points away. That's bigger than my stop. I don't chase the long and say, as a matter of fact, I kind of sit back. Ideally, what you guys would like to see today is the market to weirdly interact with like some of these. These are all your A pluses. This is really all we have to trade with today. These are the only dips to buy. Other than that, it's chase the high sort of day today. So no sell off, no market crash. Things are nice and steady, nice and tight today. How did I know to get in where I did this morning? That's the 1A trade right here. This actually literally translates to long and open. So let me give you guys a little tutorial. How many people here don't understand what this liquidity map thing is? Y'all want like a 3-minute lesson on it? Y'all want me to translate what that means for you guys real quick so y'all can follow along? You understand? Okay. All right. I never realized there's a lot of you guys that may not understand what you're looking at. Okay. All right. Holy shit. Okay. All right. You proved your point. This is my bad. I forget that we have, you know, 500,000 views this month on our YouTube channel. So there's probably going to be tens of thousands of people that have never seen this before. All right. All right. You guys proved your case. My bad. I'm an idiot. So let me, all right. So let me give you guys a tutorial. This is I'm just sitting here trolling because I'm used to us being like our small little hardcore niche community that all knows what this is. I forget that we literally have 10,000 new people watching the stream every day. All righty. Okay. So liquidity maps, right? We look at options and the underlying. Here's the trick. We take SPY options, okay? SPY options and translate them into ES pivots. The same thing for NASDAQ, okay? The pivots are drawn on the screen. You have 4 different pivots we look at. There are these orange and blue lines. They are rejection pivots. When you get to them, it bounces off of them more often than it doesn't. We have back tests to support it. 70 to 90% chance of bounce. It's a high probable reversal pivot. Okay, the other thing are these zones, light gray, dark gray. The light gray, it's the top of the box. The dark gray, it's the bottom of the box. Now you have 4 pivots to play with. And so between all these pivots that also bounce, you can create a map of like where flow can be, like trade plans. Between pivot to pivot, you can create a trade plan. And so the legend translates this into plain English. An example is the one you see on the screen here. Okay. The one you see on the screen here looks like it's this one right here, which literally translates to green arrow means enter a position at the tail, exit at the tip. Okay. So that means there's a trade there. The black dot means open price at 9:30. So basically this instruction plus the note at the top, 1A says long at the open price and exit at the white line, which is next resistance. So this says take a long at the open and exit at your next resistance. Now, additionally, what this says up here is a little bit of confluence to go with it. For 1A, I'll take a small position if my confluence indicator is greater than 0, and I'll sit out if it's not. So now this is a position instruction. I'm going to long at the open the next resistance and trade small if I have my confluence, or don't take it if I don't. And the confluence is written on the chart for you. Here it says the confluence is good, res is greater than 0, so it says support. So long at the open with a small trade to next resistance, which is what I did. This is telling me what to do and how much to do. That's it. Yeah. So liquidity map is using options and drawing a map out. Let me show you guys something pretty cool. I'll take one more minute and show you guys there's an actual back test with all this data. Like I said, back in the day, I looked at Black-Scholes and decided I can create volume pivots out of it. And lo and behold, I did. And they're so strong, as a matter of fact, these are the probabilities in a bear market. It's much better even in a bull market. In a bear market, 48% of days don't even touch the blue line. They stay above it. Cool. So sell puts below it. You know what I'm saying? Half the time it works. Actually, if you add the fact that sometimes it breaks and recovers, is another 20%. 68% of days do not close below the blue line. So option sellers can win a trade 30% of the time. This is in a bear market. In a bull market, when all confluence is there, this is actually 80%. So it's roughly almost 70% in a bear market, 80% in a bull market. Okay. MHP, so it only breaks 32% of the time, and MHP only breaks 27% of the time in a bear market. In a bull market, that's 10%. So bull markets are so strong, you never break through that orange line more than 1 out of 10 times. Okay. The 90%, 80%-ish is the same probabilities that you stay on the same side of these orange. This is a back test done by one of our members, not by me. So Humble Trader is a member who collects data and actually publishes it to the group. He's just a volunteer, and this is his actual numbers. We wanted to see what our data looked like during the crash in March. just to see what the worst case scenario was. And even the worst case scenario, our stuff still works 70% of the time, which was really good to know, by the way. It was recently added to the boot camp 2 boot camps ago. All of these tools are located like in our Discord. So we're basically the OG grandfathers of the gamma exposure world. And you see like a lot of these companies like Spot Gamma and you know, I don't know, Trady Ticks and even Jex in general. We're actually built off of like, you know, we sort of started that movement. The gamma exposure movement. We were small and more of like a kind of a geek club rather than a, you know, software company that got PE investment and marketing dollars and stuff. We just bootstrapped this in our own garages. Why exited for next resistance? Normally I go for 1.5 to 1 trades. I should have held to next resistance. I did, but this trade, usually when I get at least 40 to 60 points, sometimes I'll just trim out. If it's a small position, I'll just take the money. I could have held all the way to the end for a little bit more. This one on the screen closed automatically here. These two I just, as discretionary, just chose to take the profit. I'm still unsure of this market because of what happened last week. So because all the data looked good, there was no reason for me to short to get out of the trade other than I'm being a wuss. VIX is still really, really off, and I'm not. I know I'm convinced that the bull market's back. I'm not convinced 100%, but things look okay. They look okay for now. VIX opened in a liquidity pocket also. That was another reason. The VIX itself could have stabilized, which could cause volatility. And it already was a small trade to begin with, right? So, yes, sirree. Yep, that's just Matt's being a wuss, which I should probably have bigger balls for this, but yeah. The A+ trades for today? Yeah, there's no A+ today that we're gonna get unless the market just dies for whatever reason. I don't think A+ are on the table today. A+ is something that under ideal conditions is 90%. And you can see they're all loaded down here. So your A+ are going to be your dynamic hedge pressure estimate, A+ here on the long side. Your liquidity pocket range. So all of this here, here, and here, all 3 of them are also A+ as a cluster. So when you have clustered pivots within 1 strike distance, this entire thing is like your strongest zone. Yeah, so that's it. 937, and then this area here for NASDAQ, and then S&P is... And by the way, if you guys are just tuning in, I'm on a 7-week win streak, by the way. I haven't lost a trade. I haven't lost a trading day where all my account net was negative since the first week of September, by the way. So this has been a and then I won a trading contest in the middle of that. This has been the luckiest, craziest trading I've done in a while. And I've managed to survive. It's been nuts. I've taken some big losses in some accounts, but I managed to claw net some green every day. And it's been a freaking whirlwind. Call luck. Am I shorting? I'm not. I think it's going to hold today. Your A+ is an S&P. Same thing. You got a cluster down here. You've got an A, which is blue, and then 2 A+, which is there, and you got a cluster there as well. So this is a huge cluster of pivot as well. 70 to 50 is a massive support. Like what I love, and again, I don't think it's going to happen, but with these clusters here, all inside of there, if the market were to die, this is like where I go in heavy, heavy, heavy with all this clustered up there. They're all supports for different reasons. And you're going to get hedging in all of them. So, you know, I bet that the clusters usually hold when they're strong. Now, again, DD band is always resistance for a little bit. If it does break through and push through it, there's another really strong pivot that usually when you break through it like this, I'll hold and wait. And I'll give it like maybe an hour. And as soon as it returns and bounces, I'll take a second long here for the run up. So I never chase through a bull break pivot because it's very rare. These green lines, the probabilities from the handout, I'll show you guys really quick, is only 4% of days break through that to the upside. So all of my stuff is statistical and based on back tests, which makes what makes kind of Rocket Suiter cool. And that's why I think we kind of grew as big as we did, because we just show people the actual numbers and it's all available in public. only 4% of days do break through, and about 88% of days stay between the two green lines. So it's rare to break through. The thing is that when you do break through though, most days on the bull side end up closing above it. They don't really turn back. So I never short when you do break through. Only 4% of days break, but when they break, they're strong. Bull days don't like to sell off. The opposite is true on a bear day. 8% of days will close below. This is the percent they close by the end of the day, by the way. We just counted the days. And on a bear side break, it breaks fairly often, but most of them actually tuck back in. The remainder is about 8% of all days stay out. So actually more days that break tuck in than stay below. So I always actually long on strong pivots, the 90%ers when we do break through the band. So again, these are all different like statistical. I'm a statistical trader, so all my stuff is based on stats, not patterns, not candles, nothing. I know the statistics. So this one right here, 96% of days will stay below the screen line. So the bears in the house usually will short the screen line. There's usually going to be red candles from it. But the probability of it reversing is not not strong. So yeah, like if you are a bear in the house, this is it. This is the place where it is. If there's a reversal, it's here and nowhere else, or it's if it does break and return, this is the pivot that matters. Yeah. The indicators are paid content. Well, the entire trading platform comes with the indicators. Yeah. There's no A+ for short because the greater market is bullish. So my 3 indicators I use for bull market, the steady ratio, S&P being above the orange line here, and then monthly maps, which you can look at right now. All 3 are bullish. So I don't really have a any bear market setup that's A+. All your bear market trades right now are going to be like C ranked. They're going to be very low probability. But this doesn't mean it's not worth taking if you're a bear. Like this is the bear pivot if there ever was one. Yeah, monthly maps are bullish. So if there is a bear trade, this is the one. You see how I can identify exactly where that red candle is going to be? That's pretty much it. That's like clockwork. And you might have gotten 40 points short on NASDAQ there. Now, do I want to take it? No, but that is the pivot. Pretty cool, right? What does DD band mean? It's just a nickname. This tastes like dish soap. I don't think I cleaned that out. Good enough. Or put water in it. I'll be blowing bubbles in a second. DD stands for doomsday. It doesn't mean anything doomsday. When we create it actually is a risk interval band. The DD ratio is a bull bear bias ratio. We created just goofy names for our projects when we have project names. So the idea is like I come up with an idea or something in the community, you know, we're collaborating, we come up with an idea for an indicator. We make a project and we have a bunch of secret projects of working on stuff. And we give them, you know, James Bond sounding code names. And you can see over here, we've got all kinds of cool project names of stuff that we got irons in the fire. Okay, project this and that, this and that, this and that. 626, if you know what that reference is, then you're geekier than I am. But we come up with a cool project name, like a secret project, and then we do research and we do data mining. We talk about it together, and then when we release the indicator, we give it a name. And we had names like Contango Midpoint. We just now call it Triple B. Risk interval band, we call GD band. But it was called Project Doomsday at the time. The name of the project, we called it Project Doomsday because whenever I was actually using that ratio, the ratio was actually the percent of stocks that are in a bull zone divided by the percent 626. Wait, do you know what it's from? Aliens? Yeah. You're on the right path. Lilo and Stitch. You guys nailed it. Yeah, it's Stitch. There you go. Y'all nailed it. Mazda 626. Actually kind of funny now. It's Lilo and Stitch. Yeah. Y'all are geekier than I am. Stitch is Experiment 626. All right. So anyways, here, percent of, so basically like we take every stock, right? And we're going to say the idea is the index will stay bullish if the stocks stay bullish. Example, NVIDIA. NVIDIA is currently in its own bull zone here, right? So we take the percent of market cap in a bull zone. NVIDIA would be in a bull zone divided by the total market cap in either zone. We compare what's bullish versus what's bearish, and we take the percent of stocks that are bullish. Right now, with 82% of the market cap being bullish, then it's likely that why would the index fall out of its own bull zone if the stocks are in their own bull zone as well? Stocks are getting a lifting pressure from there. So we've noticed that when the confluence is there, we watch what the stocks are doing to make the same bet on the futures. So the bull zone, for instance, in NASDAQ, is likely to hold because the majority of stocks aren't bullish. And that's all it's saying. And so we could have called it a bull bear bias indicator, but Project Doomsday was something that when we were doing the indicator, what I noticed was that when I was studying this ratio, I had an idea that we can use the stocks to talk about bigger consolidations. Like if the market was topping out, right? And the market was sort of doing this. And the idea was, which way is it going to go? And we looked on the commitment of traders and we saw that the net long position in S&P futures was in decline. Okay, people are selling futures. What's going on with the stocks? So we were like, well, let's just see if the stocks ratio starts changing. And what we noticed was that in a consolidating period, if this ratio goes less than half, the market's falling to lower lows below the previous low of the consolidation. So we were like, oh, well, it's kind of like a doomsday clock. As the market's consolidating and this clock winds down to be less than half and more stocks are bearish, the consolidation breaks to the downside. So to study it, we spent a year studying it and we called it Project Doomsday. We have people in our group volunteer to be part of this. So all you math nerds out there, y'all are going to be at home at this place. And our lifetime member base, the people that buy the software outright, they can volunteer for any new indicator or project we have. And we'll spend months, if not years, studying something together before it becomes a thing for the group. And then we release all the data together as a team. So it's not like it's just me coming up with an idea here. We have volunteers from the community. Since we've been together for 10 years, we come together as a group and we look at the data and come out with something good. It's peer reviewed. So it's like you guys get a lot of eyes on this and we try to look for things that work with the data, which is different than most people. Like, here's some statistics that we're doing for the overnight dynamics. So this is from Ian. So this is the late, and so again, this is, like I said, we're the most different trading community you ever meet. Our members volunteer and publish papers for you guys. They literally write technical papers on our stuff and give it to y'all. So this is the latest. It hasn't been published yet. But this is the latest dynamic hedge pressure stat. So right now we're doing the back test and he's putting together a back test. This is a volunteer member and he publishes it for me to review and read and we go over the data together. So you guys that know, like Rocket Scooter is like a fucking PhD dissertation for some of us. So these are the stats and how to analyze it. And he's cataloging like what each type of trade looks like. If you open above hedge pressure, open above both of them, this is the distribution of the candles on each particular setup. So that's what makes us different than most people, you guys. Like when you open below MHP, you have a huge majority of candles, particular possibilities, and then we're cataloging how many of each one of them happen. Like an example, if you open between the two, we had one day where it bounced between the two and stayed there. You had 2 days where it broke MHP and came back in. One day where it broke hedge pressure and came back in. So you can see when you open between the two, the majority of them stay between the two. Pretty neat, right? And actually these bumped. Now, when you open, actually, no, I'm sorry. This is when you open between the two, the majority break through to the upside and very few of them break through to the downside. This is where the 90% comes from. So an example is, this is of October the 15th, right? So here, if you open between orange and blue, there's only one day that ended up below orange. The majority of days end up above orange. See, 2 plus 7 is 9, 10, 11, 12, 13, 14, 15, 16 out of 17 didn't break the orange line, which is why when we say 90%, it's literally 90%. We don't make that shit up. And this is something that our member puts. We have a bunch of members who publish papers for fun in this community, backtesting our stuff and giving it to you guys. They're not paid. This is a labor of love for Ian. He has a good time doing it. Humble Trader put together the other backtests. Are these available in the Discord? They're absolutely available in the Discord. Yeah. So like we'll have a project team and volunteers are like, dude, I just want to be part of this. This sounds like the coolest thing in trading I've ever seen. And I'm like, we got a million ideas, come on board. And it usually takes a long time for something to become published as an actual indicator. We go through a lot of steps. Yeah. I mean, I was an engineer in my past life. I was a research scientist in college. I used to teach at University of Houston. I have like an strong academic focus in everything I do. Peer reviews, get a bunch of smarter people than me on this and get them to look at it. Here, I'll give you guys, when we actually came up with the DD band, okay? The DD ratio. The idea was to create a ratio to decide if we can have a leading indicator on the index. This ratio is bullish or bearish, and we can have some info, essentially to lead me into believing stock market falling, then index is falling. So we had a volunteer. This is Project Doomsday. I'll show you guys what happened behind the scenes. In Project Doomsday, we collect the data manually one day at a time before even built into the platform from May of 2022 all the way until November of 2022. June, July, August, September, October, November. 6 months of data. We collect the data all day, every day, manually of every single stock. We made a rule system for volunteers on what to follow. Here's how you grab all the data that we need. Can you guys volunteer for shifts? We had dozens of volunteers. They took over shifts. We had a whole clock, around the clock, people would grab data. They would come through here and catalog this data day after day after day after day after day for 6 months. One at a time. Jod even did some, everybody 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 did some, on and on and on and on and on for 6 months to come up with this one number. And then after Project Doomsday was concluded, then we did a back test on it for a couple more months to determine the efficacy of it and found out it was a fantastic indicator. And then we got everybody in the Lifetime community together and then we voted on it after publishing the data to the community. You must have a unanimous consent of our Lifetime members, 100% vote of yes of every member after they reviewed the paper to decide if it becomes an indicator we use a rocket scooter. If one person says no, then we don't release it. One person. We trust our community. If one person says no with good reason, we let them present their case. Then we go and we do more work on it to either modify or disprove the case or prove the case. If they prove the case, then we throw the indicator out. If everyone hates that one guy, that's the fifth dentist that never approves of the damn toothpaste. 4 out of 5 dentists agree. It's always that one guy at the bar. They're all sitting there drinking. What's up, guys? Oh shit, dude, here comes Johnson. Fuck that guy. That motherfucker didn't like the floss. Why didn't he like the floss? He always says no. We always like it, and he's the one. Oh, he's here. Everybody just, Johnson's here. Hold on. The fifth dentist, right? That guy's an asshole. That motherfucker would have let me get the floss. Brian, calm down. It's fine. Okay, there's always the one guy. But honestly, our stuff, we've never had an indicator not make it through. We had one make it through a couple of rounds of iterations. And then no. So if you want to be part of the process, you're just a Lifetime member. We're about to have Ian's last back test and published. So dynamic automation is about to be released. We have to have our Lifetime vote. We're about to do another one of these things to automate the overnights, those probabilities. So anyways, just to let you guys know, Rocket Tutor is a collective of people, of minds. It's not just a math thing. I'm the trader. I certainly run the company, but I run the company like a peer-reviewed think tank. It really is. And nothing just gets made and released. Every single thing you see on the screen has been a process where dozens, if not hundreds of people have had their voice and mind on it before it actually hit the platform release. So anyways, when we were trying to come up with a name for the indicator, the last thing in the meeting was like, let's give it a name. And everybody was like, well, how about just call it the bull bear bias ratio? Then we were like, yeah, but we already got a triple B. We already used those letters. So somebody just call it the doomsday ratio. Because in a bull market, which the market's mostly bullish, when that ratio is less than half, well, shit's hitting the fan. So it's like a doomsday clock. And that's why we named their project Doomsday to begin with and said, let's just call it DD for short. And then everybody laughed and was like, that's fine, let's go with it. And so the name stuck. But the point is that there's a different, and I know there's a lot of people out there that stream, a lot of people that trade, a lot of influencers do stuff, whatever. We're different, man. We've always been different. We've always been like a small niche community who created something very substantial. It's data driven, which is what I like. You know, there's a lot of like, trust me, bro, like that goofball midget that I've been roasting, the one that said he made $100 million in his Instagram ads. You know, I've been roasting that guy for a while. These goofballs out there, it's just some guy that's like, trust me, bro. And I'm like, here's a published paper made by a volunteer of the community. These are the people who have donated tens of thousands of dollars to the stream that you guys can take the boot camp for free. This is really like a community thing. And I'm just the elected representative, but man, everything you see on the screen is the result of hundreds of people's tireless amount of labor, work, data mining, passion, whatever. So we're different, but it's statistics, right? The idea is that the stock market's random. There's no pattern stock market. There's no predictability. So we started with the premise that the stock market's random. Your candle patterns and ICT stuff and whatever is not gonna be able to predict the stock market. So let's build a trading system off of that. Very similar to Jim Simons, the world's most successful hedge fund manager, had a similar approach. Is that the stock market is random. Stock movement is random. Its ups and downs are random. It's not predictable. So how did he continuously make money in an unpredictable world? If you're using technical analysis, if you're using VWAPs, you're using indicators, you're using ICT, you're using fair value gaps, whatever, you're actually, the basis of your strategy is the market's predictable. That's your foundation. You've made a postulate that the stock market is predictable. An infallible postulate's an infallible claim that is just a God-given truth. Like the straightest distance in Cartesian coordinates between 2 points is a straight line. That's a postulate, which is true. It's just known to be true. You can't disprove it. The smallest, measurable amount is a point, right? In physics, a point. In math, a point. These are called postulates. Your postulate is the stock market is predictable. That's what you're claiming if you're using technical analysis. So we absolutely disagree on that foundation. I believe the stock market's random. How am I winning trading contests in a random market? There's differences, right? I don't believe the stock market's predictable. So how do I come out of it consistent, right? There's a challenge there, but Jim Simons also is the most celebrated hedge fund manager in the history of hedge funds, who also had the same foundation. So statistics are what are consistent. There are certain things that happen consistently, like 90% of days don't break through this line, but anything random can happen to still satisfy that condition. Market goes up, market goes down, market bounces, market goes, I don't know, back in fucking time and then makes it forward. A million random things can happen, but the truth is statistically it doesn't break that pivot. So what it means is that my approach is different than most people. It's not trying to predict where the market goes. It's reacting to the market when it lands on that pivot. When it lands on that pivot, well, more often than not, it will bounce. So this part of the set of data is not random, while the set of data itself is random. See, what's going to happen next, I don't know. But what I do know is if this part happens, this part's going to happen 90% of the time. The cause and effect is not random. The effect is not random to the cause. if you interact here, it's going to bounce. That part is not random, but the entire set of data is random. So your candles are random, and I hate to break that to you. If you're struggling using orbs and fair value gaps and turtle soup and hippopotamus, giraffe, monkey wrench pattern, I don't know. Trust me when I say me too. When I tried starting using that stuff when I started trading. How do taxes work with Tradeify? You get a 1099 at the end of the year. I gotta stop drinking that because it tastes like dish soap, man. I'm gonna start blowing some bubbles here. So the idea is that it's the entire market is random, but the effect to the cause is not random. The probability is a certain amount that something happens. So I wait for those things to happen and do nothing in between. Why did I push out on my trades? Well, we were pretty close to the end, and now the end is it's probably random from here. So if there is resistance, it's from here. And I'm going to wait for something stronger and better. And that's basically it. Yeah. Somebody says, but I trade for hours, whereas some can make the same amount of money in less than an hour. If it was random, then they would not be able to, they're not predicting the market. I'll tell you something in general. There's a lot of people that show, what's the word I'm looking for? Cherry pick. I will challenge you that there is no successful day trader on social media right now that makes more money than I do in an hour on YouTube or Twitter or anything, or like that publishes their stuff. Like any streamer or whatever like that. I'm saying like not all social media. I mean like streamers, futures, prop account traders, all these guys. None of them do. They might say they do, but I promise when you overlook all their history, their results are also random. Cherry pick. Like you don't see the losing days average out. If you're trading a lot within small periods of time, you're probably going to lose over time. The market is completely unpredictable, and there's people that claim they can predict it, but they don't show you their historic results. I have an open challenge, and I would donate 100,000 to charity if any streamer would give me their 3-year broker statement. I made that post 10 years ago. So there's a lot of people that can make that a lot of money in a short period of time, but over time they're not winning, right? Yeah, I could scalp left and right and make big numbers and then lose it, then big numbers and lose it. But the control aspect, like over time, they don't make more than me over time. Maybe in a small batch of time, probably. But over time, I'm sure they don't. Nope, nobody. Nobody. None of these people. Yeah, no. Yeah. But the point I'm saying is that my belief is that the market's random. And watch, I'll ask you guys, do me a favor. I'll show you guys an experiment. Can somebody, now again, don't just say yes or no, but can somebody cite anybody's last 2 or 3 year broker statement in the streaming world that use ICT stuff or whatever, orbs or flags or bear patterns or bull patterns or whatever? Have you seen years of broker statement? No, don't say have you seen it. Can you show me? Like, I want to look for it. Can you show me? Not just say that you think, but can you show me? Like literally, like type it in right now. Rips is one of the only people that shows broker statements. So does Brian. Yeah. Like, just show me. No. I'm not asking for names. I'm saying, can you show me a reference? See, this is where Rockseer is different than most things out there. I don't want you to tell me what you think. Can you show me? Can you show me? So far, 0 people have shown me something I can check out. But I want to say, like, you got a link or a tweet or something I can take a look at? Yeah, link it up. The exercise is that there's a lot of image of it, but there's not a lot of proof of it, which is the actual truth of the world. There's a lot of people you think do well, but there's a lot of fugazi out there. A lot of people that just don't, right? So, like for me, you can watch every single day. You can see the before, you can see the trades, you can see the after. You can't get any more transparent than just watching somebody do it. But like in general, can you reference mine? I've got 10 years of streaming history. You can see the whole thing. I've won 2 trading contests this year. Broker statements posted on those. Let me show you guys real quick. Hold on. Yeah, so like for me on my stream, an example is you can just see what I'm doing, right? And then of course, let me pull up this. What is that? Oh, that's this. Right. The 2 trading contests I did. Patch trading contest, I won that. I won ETF contest last year, a month-long trading. 80% win rate over the course of a month. This was another trading contest I won first place in. My P&L curve looked like this over the course of a month, 300 something trades, 80% win rate. Pat's contest, I had like a 96% win rate over 30 trades, something like that, 24, 30 trades. So like when I say like, when I enter a trading contest and people are like, maybe you got lucky or maybe whatever, this is my P&L curve on a month of trading. And a fucking crazy ass choppy bear market or bullish choppy volatile market. And then like, yeah, this is the history of the contest. There was 1,000 people entered that one. I won that one too. The idea, and then like you can just watch everything I'm doing here. And these are all prop accounts, so there's no like broker statement that comes with them, but payout history is in August, I got $100,000 something in payouts, and September was like 100. August was 100, September was 80. Let me go see what my payouts are really quick. There's no broker statement with this stuff. Let me just, hold on, let me log in here really quick. Now granted, October is only halfway over. But we'll see. But in October, I've made $60,000 in prop payouts. This is just from my rice. I just logged in to it to show you guys. So this is like, you know, prop from payouts. So 60. That's not that much, but it's 60. I know it's not that high, but almost half, like, no, let's say half of that, like 20 something or 25,000 of that's been the Tradeify. I've got like 9,000 to go live. And by the way, I'm live at My Funded Futures. I'm live at Elite Trader Funding, and I'm like 9K away from going live with Tradeify. So I'll also be live in 3 prop firms, like meaning that I've got so many payouts, they just push me to live. I don't trade the live accounts on my stream, just in full transparency, because now that I'm as big as I do, companies pay me to show their stuff on my stream. So that's the level I'm at. Full transparency, I'm always about it. Why I don't trade my ETF and why I don't trade my MyFunded Futures live accounts on stream? Because they don't pay me to show their stuff. So I'm not gonna show it. So these days, you know, this is advertising space now. So there's again, and that's just, you know, business. There's a business opportunity there for me. Once we got so big and people watch us, companies like, oh, we'd love for you to trade our accounts and show people. I'm like, yeah, you can give me $100,000 a month and I'll do it. So they don't pay me enough to show their accounts on my screen. So I trade my partner's accounts. For 9 years before this, I traded a single live account on this stream and nothing else. So I never traded props. I traded, like, you guys know I was like the first YouTube future streamer. Pat Weiland, me, and Matt all started roughly at the same time. 2016, I was streaming on Zoom. 2015, I was streaming on Zoom. 2016, I was streaming on YouTube. And so were those two guys. And between me and Pat and Matt, we all had like 50 viewers a piece. We were small. Nobody traded futures at the time. So there's a lot of people that join now. They're like, oh, you're just trading props, prop this and that. They don't like, I was the first YouTube streamer streaming futures, literally like the OG. I've been doing this since 2016 on YouTube. And back then there was no props. We were all trading live accounts. I was trading one account. The account number was there. The P&L curve was there. And I was known as the guy that just showed his statements every year. And you could see it every month. The performance, the single account was there. The balance was on the screen. The account number was on the screen, everything. I built my brand off of trading a single account, being the transparent trader. And now that props got big, I'm just leveraging our fame to make, you know, many hundreds of thousands of extra dollars a month from the influencer money. So, because it's free money. And yeah, I jumped into the hottest thing in futures because that's where the future is. I see as a platform owner, I have to be front and center. Dish soap. Why do you keep drinking the dish soap water? I know. Y'all saw the look on my face when I drank it, right? I mean, it's not going to kill me, but it's definitely not. It just tastes like there was a little bit of soap at the bottom. But right, so the point is that for me, being a platform owner and everybody in futures trades futures, we were this long-standing geek club that were building cool tools, and we built a platform. And the futures audience appeared in the prop industry, and the prop industry is going nowhere. Regulations about to support it. Prop firms are making platforms. This is where we have to be. So we made a business decision last year to jump front and center in front of it. And it might sound like we sold out, but we're actually pioneering and leading the effort in the prop space. And we're just got to be where the traders are. But at least we're transparent about all of our motives. What's up? I also like making money. Hey, are the guys here? Outside? All right.
I'll trade you.
What? You'll trade me?
Wait, did you show them?
Oh, yeah, for my birthday. Oh, wait, be careful. Hold on.
Yeah.
Yeah, you want the other kolache?
Yeah.
I need the other half. All right. So how many people that have taken my course are profitable? Oh, the 20-hour boot camp. Guys in chat, have you taken the boot camp and are you profitable? So for my birthday, Doc made some cookies of some very embarrassing photos of me. I don't know if you guys can see it. This is a cookie. And this is me like past here. Let's see if we can hold it really quick. Watch out for
take it out.
you have to look right. Yeah, there's a glare from the plastic. All right, so make it, no, you have to look right here. Yeah, there you go. Okay. So apparently that's me passed out, wrapped up in my heated Snuggie on the couch, it looks like. And you put that on a cookie for everybody. Yeah, there's like one of me sitting here on the stream. And then there's one of me in my Halloween costume last year, which was Oppenheimer, which was a year late to the trend because the movie came out a year before that. And like she was Barbie and I was Oppenheimer. That was kind of the joke, but
people would jump from one movie to another that year.
But like it was already an old, it was already not fresh in everybody's minds. So half of the people that I ran into were like, dude, are you like Indiana Jones? And I was like, yes, I'm Indiana Jones. After I telling people who Oppenheimer, I was like, no, I'm Oppenheimer. They were like, huh? I was like, the scientist from the Manhattan Project.
No,
not Manhattan Project. Yeah, the nuclear bomb guy. The movie that won all the Oscars. Yes, I'm Indiana Jones. But anyways. That would be me to be a scientist for Halloween. Do I need to go outside? Are they?
Call me downstairs.
Okay. Hey, take that. Thank you.
I don't know if you need to go, but the fact that he's telling me might be you might have.
Okay. All right. Anywho, just a little history about the stream. So like I built my entire platform on social media by just being a trader that traded a real account. And I was always like, the prop firms are stupid. Like, this is for newbies, and the prop firm, the hustlers out there aren't real traders. And I'm gonna be like the OG guy. And we were just like, okay. So we were just like this like underground hit for the longest time. And then once we started building our platform and realizing that the majority of futures traders are getting introduced to futures through prop firms, we had to be part of it. So, you know, that's why all of my focus is on props now. And my real trading isn't front and center anymore. But it doesn't mean that I don't also still trade. It's just not part of my interaction with the community anymore. I have a real account that I trade on TradingView on my phone. So you see me pick up my phone, I'm whipping out trades, knocking trades out there. So just letting you guys know. Just how the algo finds bull and bear zones, Aiden. Yeah, so it's a very complex calculation. The bootcamp tells you what it's looking for. If you guys take the bootcamp, we kind of explain what's going on under the hood. We don't reveal the actual hedging model that we use. This is very proprietary, of course, but we tell you what we're exploiting. The bootcamp does a really good job of telling you how to use the stuff that we have, giving you the stats to go with it, but also like in an easy to understand way, it explains what it is we're exploiting. Andrew says, really appreciate all you do. I've been killing it consistently since tuning into the streams. There you go. Yeah, so one of the things is I don't ever short off, even though I said if there is a bear trade, that's it, but I never short off a DD band because we call it blind monkey theory. It's part from the boot camp. Don't bet against bull markets. When this green line says support, there's absolutely no shorting off of that. According to like statistics, one can if they want to take the risk, but I don't take it because it's a low probability setup. And the handout in the boot camp absolutely has a no shorting rule. Here, it also says it above green, no shorting, and off of green, if the ratio is greater, if the stocks are bullish, there's no shorting off of green either. So you see how I'm not engaging in the short. I'm just sort of sitting out now, waiting for something good to happen. Yeah, somebody says very few people take real life trades and then leave the stream up. Rips, Brian, and me are the only ones on YouTube. Yeah, I love Rips and Brian for that particular reason. You know, Brian's very transparent. His trading account's up. His trading account Netlick is $1 million now, and Brian was like starting out with nothing. You know, Brian was making affiliate dollars, putting it in an investment account, making more, putting it in, and trading it up. So you know, Rips every day shows his burger sandwich. I love. So Danny says the market is manipulated now. It's not random anymore. Well, the buying and selling is random. The market's very manipulated. Yes, but also because we can calculate where, even if it's not manipulated, we can calculate where people cluster. Like hedge pressure, there's going to be just a net influx of random people longing, but the randomness is congealed to a certain area. Like everybody's action of where they're hedging is at a random spot. But there's a statistic of more people are hedging here than there. So in like a bell curve sense, there's like a distribution where people are mostly acting around here, which is why statistically, it's kind of like you learned in high school, right? You got an atom and an electron is somewhere around it. You can never know its position and momentum at the same time. But if you know one, you don't know the other, right? You guys remember that? But you can statistically calculate there's a distribution. There's a probability of where that electron is. And there's a little graph that goes with it. They call them orbitals. Like, you know, remember freaking electron orbital is like this and this. What is the orbital? Well, it's a distribution. It's a mathematical thing. This is the electron probability density is here. Probability is probably 0 that electron is somewhere out here. But if we were to isolate where it is, it's probably inside of this little horseshoe looking thing. So this is just a physical representation of this. We don't know where the hedging is going to be, but it's very likely to be maximized here. And it's, again, statistics right now. You guys don't have to understand statistics to that degree to know what's going on, but it's very simple. 80% of days, will stay above this blue line, 20% will stay below. That's basically it. And if the market falls to there, I'm more likely to long off of the thing. And when you guys are learning from the boot camp, it's basically that method. We're a statistical based method where there's probabilities. 90% of days will stay above this bull zone bottom, right here. 80% above there. 96% or 92% of days will stay off the green line. And that's basically it. Resilience went through the roof. Usually when resilience goes crazy like this, it means one of the big market cap companies probably broke through half gap. And I think let's like load them up and see who it was. It was NVIDIA, right? So you can see, you guys want a good example of NVIDIA. NVIDIA was below the half gap, and you see right here where NVIDIA busts through, a lot of stocks busted through at this moment in time. That's where resilience takes a sharp move upward, is when NVIDIA was gapping and selling, and then NVIDIA filled its gap and kept going. You all see this right here? That's what happened to resilience. I guessed it right, first guess. So you had stocks breaking through half gap in rapid succession here, like NVIDIA and stuff. That's what made the market move. Ross Cameron's broker, same as a post online. Yeah, but find me someone that trades something real like futures, not penny stocks. Anybody, the exception is the penny stock people that post a broker statement, but there's a gimmick there, right? If you run a pyramid scheme where you're at the top and you promote penny stocks to all the fools and suckers at the bottom, you're gonna have a fantastic looking broker statement, but it was ill-gotten gains, right? You're not beating the market, you're just beating the grandmas and grandpas who are trading in your community. Yeah, I don't consider penny stock traders to be at the same comparison to you guys. It's more of who has the biggest Discord and who has the most believers in their community. Yeah. But I think of Stock Talk Weekly. I don't think he actually I haven't seen him in, talking about Stock Talk, and I are pretty close. I think he just runs the community. I don't know if he's actually trading. I think he invests. But I don't think Stock Talk Weekly was a day trader. If I remember correctly, he was just like a casual investor, but he was like a great market commentator and a great podcaster. He's one of my favorites, period, in social media. Yeah, Stock Talk is great. I don't think he's actually a trader or a day trader, but I could be mistaken. It's been many years since I've been out in the community. I think like the people in his community, he hires traders to work for him. But he's like the guy that's in the know of the news and everything. He's one of my favorite people to follow, by the way. I'm a big fan. He's a very smart guy. Is FundNX up and running today? Yeah, FundNX is great, man. Actually, and I have to go downstairs because the fence is being crazy, but what do I think of Wolf of Wall Street, or Wolf Financial? I don't think he does much trading either. I think he's like just very similar to Stock Talk. Their business is like market news, right? And so in the market news world, their job is just data and information and communication to the public. Yeah, the damn fence is acting up again. All right, I got to go downstairs a little bit. Yeah, so no, the $19.99 a month on Marketplace is our boot camp. It's $1 per day, $1 per class. There's 17 classes and it's $20 a month. So you're basically paying $1 per class. It's a very it's the least expensive thing out there. I make a lot of money trading and I never needed to sell trading courses. So people are always like, this is crazy. It's only $1 a class. It's only $1. That's it. Enough that you take it seriously and enough to pay the employees that work in our media department. And I don't actually make $1 off of the boot camps. So the entire training program is only the cost of a book, $20. Have I heard of Rod Casilli, Future Snack? I haven't heard of them. For resilience, are you basing the white line off of the box, yellow off of monthly, and the blue off of the other? Yeah, 100%. So resilience is the flux through here. If the market cap of the stocks are more here than there, and the S&P is tracking equally, then resilience will be greater than 0. If S&P is also lagging behind the implied value, it'll also be greater than 0. There's 2 transforms applied. And the transform looks like this. Where this is 0. Turn your head on your side. A mathematical transform, which is a sensitivity curve applied to the number. If NVIDIA were to move like this, resilience would move like this. Based on the math transform. It's sensitive here. So like it has the biggest change when you cross through the half gap. The slope is the steepest. So like, for example, if NVIDIA was like way down here and NVIDIA was like rallying straight up like this, resilience would be flat. It wouldn't even matter. Once NVIDIA starts moving through here, resilience will start moving very rapidly and then it'll start slowing down. So a stock has the most effect when it flips to the other side of that. Essentially what it's looking for is if there's a seesaw, this is the seesaw, right? Here's the base. And turn your head on your side, there's a seesaw here. Are the stocks here or are they here? Right, that's what it's really saying. Which way is the seesaw tilting? Around this point, the halfway point between the gap. And the orange and blue are the same thing. Similar thing. Yeah. What does the bootcamp cover? We teach trend identification, how to find volume pivots, trading setups, risk and position management. Position sizing is like the biggest focus of it. That's really the most, how to bet in the market is when people make our bootcamp out to be like this legendary thing. It's because of the position sizing tricks. I teach you that you're betting too big, you're shorting too much, things like that. And then market avoidance, which is now. How about my neighbor, John Carter? John Carter's great. He actually is a proven trader that's made many, many millions of dollars, and it's proven. I've had John Carter is a personal mentor of mine, actually. Him and I have had many phone conversations, just chatting. He's been such a cool friend throughout my years growing in the trading industry. And we've also worked very closely with Simpler Trading as a company. Yeah, he's pretty cool. And so, yeah, John's good. Now their style, and Raggy, she's really good too. Their style is obviously technical based, so it's very different than my style. It's technical analysis, but they're pretty good at that. If you believe in that kind of stuff, it's a good place to learn trading from. They're not one of the few places I think is pretty decent. Yeah, John's a legend. Yeah, definitely. He made like, what was it, like 1 year he made like $10 million longing Tesla, like after the COVID crash. You remember that one? He made like 10. It was like he was like buying options and shit and made like 10 million bucks when COVID crashed. Look, he told me a story about his one time, like he bought some zebras, right? He has a ranch in Austin. He told me a story. He bought some zebras, and you know, because I was like trying to, you know, because we had a phone meeting because we were going to chat about some stuff, and he was like, sorry man, I couldn't get in touch with you. I was busy chasing down my zebras. And I was like, wait, what? Yeah, you got fucking money when you got zebra money. All right. So so he was like, yeah, so I bought these zebras, right? And they escaped from my yard and went into my neighbor's yard, and they jumped the fence and were running around my neighbor's yard, and we had to like track them down with the drone and figure out where they were. And of course, zebras are kind of like assholes. You can't just go up there and ride a zebra back. You know, zebras are kind of mean. If you ever, my last car had zebra teeth marks on the window, which is a whole nother story. I'll have to explain that later. But zebras are kind of like the assholes of the animal kingdom. So you have to figure a way to get them like back to where they need to go. So they had to like scare them with like loud noises and essentially convince them to run back on their own. So like basically they were like trying to scare the zebras with drones and stuff to get them back. If I remember, I'm missing parts of the story, but he was like, yeah, it was like a whole ordeal. And then my neighbor was like, I had to tell my neighbor, hey, like, by the way, don't shoot the zebras on your lawn. Can you know, because they have giant like, ranches out there. So they had to somehow, corral the zebras back up to get him back to his property. So I always was like, I was like, that's so funny. Like, you have fucking money when you got zebra money. So, that's kind of like, so he's having fun. Dude, he's got kangaroos and all kind of stuff, and they just run in and out of the house. He sent me a picture one time of like he was eating cereal and a kangaroo was on the like sitting next to the couch, like on the floor, eating out of his cereal bowl. Just like, you know, that's the kind of success I want, like to live off the grid and like have some land out in Austin and just fucking chill with nature and have like animals there. Yeah, like, bro, don't shoot my zebras sort of thing. Yeah, basically. Yeah, zebras kick to kill. They're absolutely assholes. Like, yeah, when you go to, I went to one of those animal ranches where you drive your car around with the buckets of food and then you hold the food out the window and the animals come up to the car and they eat, you know, you guys never get that image out of your head, but they like, you know, they come to the drive-through safari. You're driving your car around and you hold the bucket out. And they had this rule there. Wait, does he live in Wimberley now? Oh wait, you were in Lakeway when John was in Steiner Ranch. You're in Wimberley now? Dude, Wimberley is like my piece of heaven. We used to own property in Wimberley. My family did. We had a house on the Blanco River. And dude, it is by far, now it's like getting more commercial these days, but we go to Wimberley at least twice a year for vacation just to sneak away. And we've been going there since we were kids. Yeah, so he's in Wimberley now on his ranch. Oh yeah, that's right. So you were there, but you're in Vegas now? Oh, very nice. In Summerlin? Okay. Yeah, Wimberley's great. It's a little like small, tiny town in Texas. This is really kind of like a little sort of piece of heaven. It's really nice. It's your traditional Texas small town, but there's like something special about it. Yeah, we grew up there or grew up going there. Anyways, so I was driving through one of those drive-through safaris and they had this like, don't feed the zebras sign. Like whatever you do, don't feed the zebras sign. You know, like zebras can be rather hostile. Don't feed the zebras. So clearly, like, I fed the zebras because no sign's gonna tell me what to do. Eat a dick, sign. Fuck off. I do what I want. What's the worst that can happen, right? So I was like, at the time, my son's mother, this is many years ago, was driving, or I was driving, and then I was like, hey, switch seats with me real quick. I'm gonna feed the zebra. She's like, don't feed the zebras. I'm like, I want to feed the zebras. I want to get a picture of the zebra and get a video too. So I was like, come here, you know, shaking the food bucket. And the zebra was like so excited because nobody feeds the zebras. And he like ran over there really quick without even stopping. And so he literally dove his head in and he grabbed the bucket with force. And he's like pulling the bucket with everything. I'm pulling the bucket here and the zebra is like really, really mad. And so he's like clawing at the bucket and I'm like batting him in the nose. I'm like, bro, I was like, get out of here. And like, you know, fighting with the zebra. And then so I like pushed him out and I was trying to roll up the window and the zebra grabbed onto the top of the window. It was rolling over and he's like yanking the window, trying to pull my window out of the car as I'm rolling it up. And I was like, hit the gas and going, and like she's hit the gas and the zebra's like clamped on through a window and like riding with us. And finally he let go as we drove away. But I had these teeth marks in the top of my window. When I sold my car, they were still there. I never got it fixed because I thought it was pretty cool to tell the story when people are like, what happened to your tent? I was like, oh, and those are zebra bites. I'll be back. All right, I gotta go help out with the fence. I'll be back. But yeah, so that was always a great story to tell when people got in my car for the first time. I'll be back in like 15 minutes. Remember, no shorting above DD band. I'm gonna wait. And then if we bounce there, I'm going to take a long off of there. What's up, y'all? All right, we're back. All right. Back in the saddle. So anyways, yeah. Zebra. Okay. Now S&P's on the other side of the band. Great run up here. Good to see that bull market back. Vixen decay. Good, good, good. Can we find another trade though? Hey. Give us some tips. You want to win Ninja Trader? So there's 2 qualifiers. I'm going to be doing the second one instead of the first one. I actually have a meeting with Ninja Trader today, by the way. Let me get more water real quick. Hold on. All right, the taste of soap is gone. That's good. All right, now the question is what is going to happen, say, for the S&P run? Are we going to get any kind of pullback on S&P? Usually there is a little bit of a pullback sometimes around here, but this is the place for me to decide. New song called Soap in My Water. Blech. That was tasting kind of weird. Okay. I have some questions you guys have. Hold on. Let me read some of your questions. I missed it a little bit. Tricks for a Ninja Trader competition. So that one particularly, you have to just wait for really good setups. I mean, it's a pretty straightforward competition. There's no YOLO potential or anything like that. You can't really gimmick it. So you just have to trade well. Try to get a really good buffer in your first trade. That way it's easier for your next couple of trades. So make sure you just wait until you make your first execution your best one. Can Rocket Scooter members help you with this? Say a pivot line is broken when the S moves 10 points. Is it the same for trading it? Yeah. So for a valid long, no. The way that it works is you don't treat it like... So the idea is that when you open above it, it's different than if you break above it. If you open above it and you fall to it, we give it a full 10 points of sort of volatility to know that it's broken. Okay, that 10 points is in a non-volatile environment, which we're in today. Usually you'll adjust that by amount of volatility. We teach you that in the boot camp. Just assume for the sake of this conversation it is 10. Okay, when you break through it, you don't wait 10 points and then jump in on the chase. Okay, what you're betting is that you want it to break. So when you break through it like it just has, you let it pull back and then touch, and then that's a second long from there. And again, you give it the 10-point stop, and then you take the long, and then it's confirmed when it breaks 10 points. You're not jumping in 10 points there. You are taking the bet here and giving yourself 10 points of allowance. Different, right? The confirmation on the breakout is not just if it moves 10 points, but if it moves beyond the pivot. From below is different than if it opens from above. Today we opened from below, we broke through it, we wait, then it falls, then it survives a 10-point dip, and then it holds, then it breaks out, then it's going to keep going. So the whole process is when I usually let it go. See how I drew these dots right here? I usually let it go Then I let it test, and then I'll take a second long with the second stop at the same place for the continuation of the move, which is what I'm looking for today. So like on an example on the S&P, if I was bullish for the further trade, this is that particular thing I drew on NASDAQ. So as an example trade, just because I'm going to take a loss if I'm wrong, I'm going to do this in one account. Watch. Just to try the trade in one account, I can let's do some micros on this one, right? Which account is this one? Okay, perfect. So let me do like 5 micros, okay, on macro S&P. Just in one account, just to demonstrate the trade. S&P came back and tested, which is why we never chase bull breaks, always wait for the test. And now I've got a 10-point deviation to play with. I've got 5 micros here. At 60, I'll stop out. If it falls to there, I'll add 15 for 2 S&P total. So I've got 5 in case it runs. So I've got small risk on the table in case it runs. My loss is small, right? This is $250 worth of loss if I'm wrong. This could be thousands if I'm right. If it dips to there, I'm going to add to the position again and then move my stop down here. And then basically sort of like, actually, sorry, not move my stop. This already is 10 points below. So right at about 60, if it does dip through to about here, I'll jump in and I'll add some more. And then I'll give it maybe a 55 stop for the whole thing. Does this make sense on how this trade works? K gets busy. That's your question. I'll just demonstrate it for you. So I always like people ask me like how something works. I'll just throw some money at it and show y'all. Just show you the trade. Yeah. So 10 points is the validation of failing. Normally when you break out of a bull pivot from below where this is the low probability event. Remember, only 4% of days break and stay above. So when it does break, I always wait for the return, which is why earlier, right? Before I left, I drew the same thing. I only drew it on NASDAQ, but S&P did the same thing. This is why I draw this. It's so routine. Oh shit, it already disappeared. Whenever I left, remember I drew this. I was like there and I put an L. That's the move I always look for. And same thing. Small trades only. This is a very small trade, 5 micros, very tiny. And if I'm wrong, then I'm wrong. It's not a big deal. So earlier I longed there, closed out, chill. Now it's waiting. Second entry, which, you know, like I said, this is the lowest probability setup, but just to continue breakout long, I could put some micros on it. If I'm wrong small, not a big deal. But to demonstrate the trade, if I'm down, I'm gonna lose 250 bucks, right? Which is totally fine. Here, I'm gonna add 15 more. Now I'm betting on this being the focal point and the breakout case to keep going. So if it falls down to about like right here, I might jump in on it with a couple more accounts as well. Need to win Ninja Trader? That's it. In this kind of market with VIXs in decay, just buy all the dips. That's my strategy for Ninja Trader. Can't give you investment advice, but you can trade all instruments at the same time on Ninja Trader. Hey, so what's the total, what's the total number of contracts you can do? Because I'm going to be in Heat B, so I'm not even in the first qualifier. I'm in the second one. So how many total contracts? And you can trade each one of them. So basically that you can trade each one of them, leverage up pretty heavy on your A pluses, and you get like a couple of resets, I think, right? I'm not really sure about that. I haven't read all the rules, but so Black Sheep, you don't need a 10-point break to confirm the breakout. The 10-point break just confirms I'm going to hold on for further movement. So essentially, like, I want to get a 10-point scalp off of it. And then if it breaks to 80 and keeps going, it's going to go even further to the next pivot. So it's not just like dangling at this one pivot. It's actually moving to the next one. So I think there might be some, let me do this really quick. I think we already crushed through the impact lines on this, but let me double check on the downside move. Oh yeah, we've already busted through this. So this is at 67.77 now. Where's the big sell-off day? Oh yeah, that's already broken through it, huh? I swear I had drawn that somewhere. 56 was it. Oh, I think I deleted it. Yeah, I deleted it when we tapped it the other day. Ah, okay. So today, it's very customary on big sell-off days that actually 56 might be the pivot. So this is a very heavy pivot. This is the actual reset spot of the big move to the downside. Let me show you what I mean. We teach this in our class. You'll get there called illiquidity pivots. This is the one that you're going to pay attention to. This is the downside move that gets rebalanced here. The sell imbalance meets the buyers here, meets the buyers here. A lot of times you will see this pivot interact multiple times. So like you have like a big sell-off day. This is the important like imbalance pivot there. This exact line, even for multiple days, kind of acts as a thing. And I'll show it on NASDAQ. I'll do the same. I teach a class on how to calculate this, by the way. This little line I'm drawing right here. You guys know the drill. Y'all been through the boot camp. Very simple process. Actually, wait. That is the big V, I think. I think it's actually there. This is the one. 236. Have we gotten there yet? Oh yeah, there it is. So there, it finally tapped it over the pre-market. So that's the one. We totally busted through it. Okay. Who's texting me today? See on my 5 micros, doing a little bit of work there. This is just to demonstrate the trade. And even though, you know, kind of near the edge here, this is that place I get to make that second decision. Right about, what's this, 69? Very close to 59. And I don't ever try to jump in too early. But like I said, I'm keeping it light for 250, like I mentioned, just to demonstrate the trade. I'm going to let it play the full 10. Is Trump talking again? Yeah, I don't think so. But let me let it drop a little bit more. Down to roughly like 60 or 50. Give me like one more set of reds. I might take this in a couple more places. Bum-ba-dum-bum. Ba-dum-ba-bum-bum-bum. Grab this in a couple more places here. I'm gonna start building a starter position in a couple of places. All right. Oh yeah, we need giveaways, don't we? Oh yeah, we ran out of time. We're gonna run out of time if we do it. Okay, guys, hold on. All right, today's fantastic, amazing, wonderful giveaway, My Funded Futures, of course. They just added their scale or their core plan add-on and My Funded Futures. You can now get $3,000 payouts on core accounts for $72 for the account, which is what you get after our discount. Currently with our prop partners, you guys, again, let me give you guys announcements. Rocket Scooter code, you get we call them tier 1 discounts, right? We have partnerships. We're not just affiliates. We're actually partners with our partners. We get kind of like really good deals and tons of giveaway accounts and stuff. Our code will always get you the best discount with anybody that's name is on our screen. Same as everyone else's code out there. Nobody gets a better discount than we do. So feel free to use Rocket Scooter everywhere you go. If you spend $1,000 in a month, at the end of that month, you can enter a drawing that month only to get a free lifetime access to the platform, which is a $4,000 prize. So all the people that maybe had a bad month, blew up a lot, whatever, you can get free education for life, maybe help you out. It's kind of like a little prize there. So you guys, if y'all use our code every month, end of the month, we have a drawing. So you give away a lifetime membership every month. Our current prop partner discount, 40% off flash sale with Tradeify. It's normally 30. It's only lasting until today at midnight. It works on every 50, 100K or 25K accounts, everything but the 150K. So any of the accounts you get that discount on with Tradeify. My Funded Futures has a flex add-on to scale, which turns the $1,500 payouts into $6,000. It's 4 times as big. The flex plan for core is 3 times as big, $3,000 payout for $72 all in. That's probably one of the best prop accounts out there right now, is the core at the flex add-on. Its payouts scale so much better per dollar you put in than any of the other firms that have similar setups. Okay, ETF, 70% off of their statics, the beginners and their expert accounts. Huge deal there. 70% off is big. And if you guys like the static accounts, which some people, that's their favorite account, they're the best static in the business. So I work with those guys. We have a code with Futures Desk. We don't really talk about it too much, but 70% off of their static as well. Right now, Take Profit Traders 40% off, and Apex is 50% off with code RockScooter. With that being said, type in My Funded Futures in chat. We're gonna give away some accounts. So a static account is one where there's no trailing drawdown, period. They're usually a little more expensive. Than like trailing drawdown. So like trailing drawdown with an example, Apex, right? When you're making money, it's intraday trailing. It follows you. And if you lose just a little bit, you bust, even though you're way up in the account. That's the hardest one. End of the day drawdown only trails once a day. It's like a stair step. So it'll trail with you and then stay flat for the whole day. And at the end of the day, it'll trail one more time. And so throughout the day, in like a My Funded Futures account, for example, it is static. It just, the static level resets once a day. But a true static is $3,000 or whatever below your starting point, and it never moves. So if you lose $3,000 to bust the account and the first day you make 5, you got an $8,000 buffer from the very first day. Apex has a static option too, but it's absolute trash. Because their static is to make $2,000 is your profit target with a 625 drawdown. That drawdown is almost 5 minutes of NASDAQ trading. Not that good. What makes the static at ETF better for dollar that you pay is like right now, for example, their 50K static is going to be $137 for $2,000 of drawdown. Okay. Apex's is like, basically what we're looking for is how much drawdown you get for the cost of the account. Apex's is ridiculously expensive for very little drawdown comparison. Let me show the Apex one. Apex static is $157 before a discount. So 50% off right now. So it's $157 for Apex for $625 of drawdown. So after you have to compare the discounts, but basically with Apex being 50% off right now, you're going to pay $78 for $625. $137 for $2,000. Do the math here. $625 times 3 is $1,875. This times 3 is $240 something. So this is gonna be like $260 per 2,000 drawdown. This is $137 for 2,000 drawdown. You get, it's half the price per drawdown. With the 2,000 buffer, you can scale that much better. So also Apex, you got to scale 3.5 times your drawdown to get the target. ETF is 2 to 1. Your profit target is 4,000 and your drawdown is only 2. So with Apex, you have to make 3 times more, almost 3 times your drawdown and pay more money for it. That's why I say it's kind of trash, because it doesn't even compare. So with the ETF after the sale, you only need to make twice your drawdown to win rather than 3 times your drawdown. And Apex is more expensive. So, you know, at the end of the day, Apex's static is designed very poorly. ETFs is kind of a steal, especially when there's a discount. When there's not a discount, it's not really worth it, because very expensive. Statics are very expensive. That's why they're expensive, because the hard part of the trailing drawdown is removed, the part that squeezes traders a lot. So the statics are usually more expensive. So what the trick is when there is a deal or a discount, then you buy the static. Apex only when it's 90% off, but then that drawdown is so tight, you're going to have a horrible time. The best thing if you like static is wait for ETF to do 80, 70, 80, 90% off on their stacks and then do it. Futures Desk also has a quality static. Those are the two that I think are worth it. All right. Ladies and gentlemen, you know what time it is. It's that time of the day again. We do giveaways. We do the most giveaways here than any other stream, I'll tell you that. We do more giveaways than Pathos, by the way. When you include this plus the 500 something accounts we give away on My Funded TV, we give away over 1,000 accounts a month. We are the biggest giveaway there is. That gives away a lot though. So, and they're bigger. But in the meantime, we're giving away 315 MyFunded Futures accounts on this stream alone, not including their stream. So apparently there's a soap in my water song. Oh, wait a minute. It's not going to pick it up. I don't know if you guys can hear it. Shoot. Oh, dang it. Hold on. Hold on. Let's see. Hold on. I can do my apps here. This. So it's not playing speakers. 1 second. Oh, I know what's going on. Okay, let me try something different. I don't know if you guys can hear that. I can't hear it. Can y'all hear that? Can y'all hear that? Nope, there's no music playing. Can y'all hear that? Nope, there's no music playing. Okay, hold on. That's so weird. Check. right, maybe this will work now. No. Speakers. Network. All right, I'm probably gonna. All right. All right. Check, check. Okay, we're back. We're back. We're back. Oh, no, this works. It's still not playing. All right, let me reload Discord really quick. What happens if I play this song? I just... You guys can hear that. Discord's audio output is going somewhere else. Type in MFFU, guys. Enter this contest. Check, check, check. Oh, I know what happened. Okay. All right. Should be back. Hold on. What the heck is going on? Can you y'all see me? Are we good? Check, check. What's going on? Can you guys... Check. All right, now you guys can... I can hear the music now, right? All right, good. We're back. There's a soap in my water song all of a sudden. All right, good. All right, now the audio is back. Okay, we're good. You've heard better sound quality at a deaf person's convention. Oh, y'all are so funny. I feel like if I was gonna be a blues musician, I would call myself Soapy Waters. Kind of like Muddy Waters, but like... All right, Kinazo, type something in chat. Claim your prize. All right, nice, 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 nice.
Welcome to the Trader 5 Grand Cup. 23 teams, 1 million.
Oh, that's funny.
But only one cruise built for liftoff. Team Rocket Scooter. Hey, 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 hey. Team Rocket and Scooter. Big Daddy Max got maxed out early. Rake trace talk rake, but that chart got curly. Can't hang, 6-speed pop. Rhinestones froze when the stop got dropped. Grips try to flip, but the field's too late. Scooter blast off. They just watch the gates.
Oh, that's funny.
We don't fold or stop. Every team on the board get mopped.
Lord Cutie.
We taking top 200 non-stop. Change your froze, mid candle close. FSP drop when the session rolls. J done now, J dump, no cap, click the wrong side. Got trapped in the gap. I'm a soft loud, but can't backtrack. Scooter keep stacking, chart turn black. J Morgan hedging with paper hands to meet Kazi, crashing in his own trade plan. Steph still flexing with that fake P&L. Scooter go live, we ring that bell. Love me like them, can't shine that glow. Rocket flame high, melting that snow. Trader 5 TV talk, all mic, no move. Ola too volatile, lost that groove. Bugatti rev loud, but the tires slip. Scooter jet fuel, full throttle grip. TJR trade, still reading rules while Scooter Nation teaching school. Scooter, we don't fold or stop. Every team on the board getting mopped. $1 million dreams, one rocket pop. We taking top 200 non-stop. Mr. Rabbit hop quick, but lost that hop. Zach's last trade made his account flop. Nutty ball sweet, but them fields ain't clean. Scooter machine running lean, mean supreme. Rose up, margin call inside. Alyssa talk hype, but can't trade.
It's kind of cool. It has everybody's names in it.
Went off grid, can't blame lag for the trades he did. Brian Stone's dreaming about Wall Street fame, but this the future's different game. Big Daddy Max say he's coming back. We already up, that's a rocket back. FSP drop, like the cash guy hack. Tangent crime markets rigged, that's black. J dumb stream lag, blaming bots. Scooter logs off with 10K live time because he thought he'd hit new high. Then Scooter flip and we vaporize. Trader 5 TV showing highlight reels, but Scooter live. We keep it real. Bugatti rev loud, but we zoom right.
Joseph Rosso. Sounds like it's underwater. Yeah, it kind of does, right? It's like a lo-fi sort of. It's not like he recorded it in his bedroom on a cassette tape. You know what I'm saying? I heard Jadon's name, Max's name, like everybody's name from the list. I heard everybody at least once. That's cool. It's good. It's a good sound. It's like extremely lo-fi, but I like it. All right. After this, we're going to talk about Elite Trader Funding's direct to funded account. We're going to give away one of those every day now. That's kind of a new thing. After this, DigiFund app, winner of my funded futures. I'll tell you guys about. That's for one more. Okay, so we're gonna do Elite Trader. We're gonna give away a daily funded account with the Elite Trader. So you'll basically be direct to funded. One person per day. How's that sound? That's a new thing we got going on. We'll talk about that in a little bit.
Scalp to steal, he was way behind, feeling out of time, and his margin was starting to squeal when he came across this young man posting hot charts, calling shots. He said, boy, I think you're rocket fuel, let's see what kind of trade you got. He said, my name's Matt Kors and I'm a meme stock star, but now I trade in futures.
Have y'all seen That is so funny. That's great. All right. Today's did the person I didn't see the person's name type up the last winner. Michael Stiers, I didn't see them type anything. It's not here. I'm gonna spin it again. My word is final on the giveaways. We made a new rule that if I spin it again and your name isn't on there, it doesn't count. Because if you type in something now, your name will pop up. So if we decide to spin again, we spin again. That's the rule. He did? I didn't see it. That's the rule. If I don't see it, it doesn't count. I'm the final judge. If it's not if it's not giving him credit and he didn't type it, he didn't type it enough. You guys got to type something like I'm here, I win. The rule is you got to get my attention. We're not going to play give away an extra account because someone didn't show up. Michael, you got to type it. I didn't see it. And he definitely typed, but rules are rules. Did he type before it ended? That's what I'm saying. It didn't show up. And in the moment of me saying he didn't type it, he didn't jump on here and say, no. Doesn't count. He typed after, dude. You have to type it before the countdown goes up. Sorry, bud. We made the rule last time. The rule is you got to type, you have the countdown, and that's it. If you miss your window, you miss your window. We got to give it away to someone else. We started giving away an extra account because of this. We can't do that anymore. I had to put the rules down. And if like I'm giving you like a 10-second, I'm like, he didn't type. You literally have a minute to interrupt me. If I spin the wheel a second time and you haven't stopped me before that, then it goes with what I chose. So you had plenty of time. There's a lot of people that are doing this with fake accounts. We're not giving them a chance to switch onto their fake. Not saying you are. So you get a moment of time to do this. Okay, hang tight. I'll tell you guys, we're about to do some more. So you guys enter the next one. All right, so now we're gonna give away Elite Trader Funding Directive Funded account. We'll talk about this every single day. You guys can check it out. Directive Funded is an account type that they have. It is a $700 prize. I'm gonna give away one of those every single day. Okay, so now ETF. Please give out 25 instead. What are you talking about? Oh, 50Ks. All right. So every single day, I'm going to give away a directive funded account with Elite Trader Funding. So I'm going to give away a $700 account every day, all day throughout the month. How much is that? Like 20 days? Dang, that's $14,000 worth of accounts. Shit. Well, one a day, every single day. Okay. So what it is, directive funded, you immediately go directive funded with these guys. It skips the eval step. The eval step is a part of trading that is hard for some people. Once you pass the eval, you're fighting the eval, and then you might blow up 5 or 10 times to get to funded, right? And when you add up how long it takes in a directive funded program, because I trade directive funded just with Tradeify, I'm live with ETF. That's why I can't trade theirs, because I already went live with these guys. The idea is that you skip the eval altogether. From day one, everything you do counts towards your final balance. Follow the rules, right? You have to trade a certain profit over a certain amount of days. And that's basically it. Everything counts from day one. That's the best part. You immediately are funded. And that's what I like about these kind of programs is they are definitely more expensive because you skip the eval step, but the psychology of blowing up is absolutely gone, right? Or blowing up the eval is gone. Sometimes it's like with Apex or whatever, you'll blow up and blow up and blow up and blow up and finally go funded. And then the very first trade you botch it because the pressure is on. Here, DTFs are great because from the first moment, you're profiting towards your goal, which is really nice. They have an active trading day rule. I recommend you guys study how it works. It's different than a traditional consistency rule. Every directive funded program out there, Tradeify, Top One, all of them will have a consistency rule that goes with it. It's part of preventing you from just YOLOing yourself to a payout in the first day. ETFs is very moderate and allows you to dig out of a hole much better than anyone else's DTF program. So you have to make a certain profit per day. And if you accidentally make a huge profit windfall, then all your other days just need to be bigger, which is pretty neat. The traditional consistency rule is that if you make a windfall, they make you trade more days, which is actually squeezing you out harder. The idea that you have to trade an extra day or two is another coin flip that you can just blow up. With the ETF, you just trade slightly bigger if you accidentally trade bigger. So then you just trade bigger and it's the same number of days and the same profit target. So I always thought their rule was better than traditional straight defined programs. But anyways, it's really, really cool. There's no discount on this right now with our code. Our code is only 70% off of their one step and 70% off of their static. One step is their traditional trailing drawdown account. Static is the one with the really awesome balance that doesn't, static balance drawdown that doesn't move. The static is the best in the business and it's 70% off now, like I tell you guys. And I showed you how it's, you know, half as hard as Apex as far as goal is, and it's a cheaper price per dollar of drawdown. So it is the best static in the business. When there's a deal, it beats everybody. 70% off, it's better than everybody. And it's usually 70 to 90% off. You can get those and they're good. But anyways, DTF, we're giving these away. Read the rules. Obviously, when you go direct to funded, make sure you go read their rules and know all the different ways, you know, that you have to manage this account. And they're very good. Like I stand by direct to funded programs because I hate the eval. Like I hate wasting my time. So on the Tradeifys, I've been doing direct to funded altogether, and they didn't have this when I started with these guys. This is the first firm I ever traded with, so they're pretty good. And their live program's really awesome. They get payout every day if I want to. It's not bad. It's pretty straightforward. And it's a great program. All right. And they're making a lot of changes to like make it more trader friendly. All right, I'm spinning the wheel. One of you guys is about to get a fantastic $700 prize. And they're usually in this community, so you feel free to ask questions because Kaizen and some of them usually lurk around here. Really good customer service, you know, pretty all around decent firm. I really enjoy how they're modifying and creating new stuff to sort of be like, you know, front and center and growing. You know, they've been a sleeper hit for a while and they're starting to pick up a lot of traction lately, so it's good. That static is really nice. If you're having a hard time passing any trading account, in general, in the prop space, static gets rid of the trailing rules. So it's a little bit simpler, relatively speaking. Manish, you are the winner. So we're going to give away one every day, by the way. And I have a bunch of Tradeify straight to funded to give away as well. And probably do that tomorrow. We're going to give away 10 to 20 My Funded Futures accounts every day. And in the afternoon, we're going to give away half a dozen My Funded Next accounts later on today. Okay. Manish, type something in chat, baby. All right. If it hits 0, I pass it on. Manish, you got to type something. All right, I saw him type. I saw it. I saw it. I saw it. Congrats, bud. All right, you're the winner now. We'll do another giveaway in a little bit. Winners of today's contest. Here's the rules. You have 1 hour to do this or you forfeit your prize. Go to my Discord, everybody. Link is in the description. Get ahead of this, by the way. Join our Discord just in case you win. There's a channel called Contest. Look up an admin named Slacks. He's lurking in that channel. Send him a message. Take a screenshot of your YouTube ID. Send him that screenshot. Have an account with My Funded Futures or ETF already. Send him the email you have that account with. So screenshot and email. And it'll give you instructions on how to claim your prize. And that's it. We'll do some My Funded Futures in just a little bit, so hang tight. Couple more. We give away about 1,000 accounts every month on this stream. So all day, all afternoon, all whatever, do we give away accounts. Nice consolidation in DD band. This is looking good for a breakout. I'm pretty excited to see this happen. By 5 micros. Doing some work. It could be doing more, but some work is good. I'd like to see this push a little harder. So Yeah, so the winner, here's the rules of the stream. That way you guys know for next time. If your name is chosen, you better be spamming I'm here until the countdown recognizes you in chat. Okay, you must, I'm here, I'm here, I'm here, I'm here. If the countdown doesn't recognize you, then I look at chat. And you're competing with a bunch of people spamming ETF or My Fund and Futures or whatever. So the rule is when you need to communicate with me, you need to type this, okay? You need to @trading with Matt, like somebody wrote, Simon Deed wrote that. You need to do @trading with Matt so it shows up highlighted orange for me, and then say I'm here, I'm here, I'm here, and say it enough so I can see it. Like Jack just put the heart there, just like that. The rule is if I don't see it and I move on, it doesn't count. So you basically get two options. The bot, which is spotty at best. If the bot doesn't see it, then I gotta see it. So you can't do that on mobile. If you can't do it on mobile, then you just need to be like, you know, like I'll fucking see that, all right? Like I'll see that. Make sure I see it, because if I spin again, you forfeit. That's the rule. You got hose, BS. You didn't type it in time. I didn't see you do it, man. So that's the thing. And I gave you, and I give people 10 after the countdown. It's the end. I give you 10 extra seconds. I go, I didn't see him type. I didn't see it type, and you didn't type then either. Like, wait, I'm here. So I gave you a second chance. Wish you would have said something, brother. What happens? You gotta understand this. You have to understand, because people they cheat our contest. They'll log in with a dozen accounts. They'll try to win at one of them. Whichever one wins, they're fumbling to log out and log in and then say something on that account. The reason, it's not saying you did this, but people will do that, right? You guys are all typing it like that. So what happens is, if we don't have those rules, then people are going to obviously, like, you know, switch accounts. And so I give you 1 extra second, but the rule is you gotta be here for the victory. How do you spam so fast? Just type something. Copy and paste. Paste it, yeah. No, they're just showing you guys what to do. But we did say on the last stream the rules are rules, so I'm sorry if you don't beat the bot and I don't see your name in a flurry of text, make sure I see it. Do @daytrading with Matt or @trading with Matt, and I'll see it. He's a bot. Okay. All right. Contest is over. We'll do it again in a little bit. We'll do another one. Just video with 1,000 accounts we give away. You're bound to win at some point. My little micros that could are continuing to go. I grabbed minis and NASDAQ. So I got 2 accounts in my funded next. 2 of the zeros are trading. And I've got some micros in S&P just to demonstrate the trade. I took a little bit more risk in the NASDAQ here. Hold on. I got to manage this one. Oh. All right, this one's about to, okay. Excellent. We can really sell it there for that breakout. So right when we dipped a second ago, like earlier today, when I told you I'm adding more of my accounts, I grabbed actually NASDAQ at that same point here at 290, and I'm already up 50 points on that scalp on NASDAQ, which is good. Again, I'm just taking little scalps here. I'm not trying to ride it the whole way up. I was just demonstrating that trade for the breakout. So this one I'm up 50, 60 points, or 50 points, give or take. Can we do a poll on what age groups are in here? Very curious. I'll tell you from my YouTube stats. I can just show you the age groups that watch the stream. Those stats are on YouTube. I can just show you my demographics. The average age is probably 30s and 40s. Analytics overview. Who watches the stream and how old are you? Who is my audience? Are you a bunch of old folks? Or are you young? Believe it or not, it's a mix of a lot of things. Check this out. Y'all want to see something very interesting is that there is no bell curve of age that is like hovering somewhere. The majority of people apparently identify as 65 or older. That's interesting. About 10% ladies, 92% men, and 0% pronouns. Thank fucking God. I'm sorry, I'm just making a tranny joke there. Okay. You know, you guys are defined, which is good. I like that. There's a very significant lack of blue hair dye and nose rings in this stream, so that's pretty good. Sausage Fest. Hey man, that's 10% chicks. And the chicks here are pretty smart. There's some smarty pantses in the stream. Okay. It looks like there's 20% are 25 to 35, 20% are 35 to 45. And only about 4% of the young folks, right? It's just like 21 and under. That's interesting to see. I never really thought of us as being a place since, you know, I don't really post lifestyle pictures of how multimillionaire my world really is. So, you know, I don't attract a lot of people there. I'm sure if I post pictures of cars, houses, like whatever, bottle service, I don't really embellish the lifestyle. That attracts that group. These are people that are smart and graduated college and working for 10 years. This is kind of where I thought most of my viewers would be. Believe it or not, this is my age. So I'm with my people who would be my friends in real life. Aw. And so, yeah, I'm watching the charts right now. There's some kind of, I don't know, somebody talking or something. I don't know. Again, I'm not bothered by it. I never am not looking at the charts, by the way. So I'm pretty comfortable with whatever that is. Looks all right. Trump might be saying something or somebody said something, but it was a very mild response to something in the news. Maybe related to the shutdown, who knows? Oh, Trump is talking about China. Non-volatile market. I don't think nothing's going to happen there. So we're good. But it looks like the majority of people are my age and then older, which is cool. So we are a more sophisticated crowd of folks in this community. Why not short if DD is only 4% of days? Aha. So that's a great question. Let me explain what that means. Okay. So only 4% of days close above the band. It's not rejection percentage, it's close above. So the thing is that if you count how many days, they always open between the two bands, right? For the most part, most days, 4% of days end up above, 8% of days end up below. So the idea is, well, why not short off the band and long off the band, right? Because of the percentages. Well, let me explain the difference. That's just close below. That's not break percent. Now, of the 8% that close below, you might have 10 to 20% actually break. And the majority of those actually tuck back in and stay put. So even though this is 8 end up there, you might have 10 to 20 actually break, okay? Whereas on the upside, you usually have 4% that break and 4% that close. So the upside is only 4% of times do actually break. And when they do, it usually will stay. You don't see a lot of breaks to the upside that sell off. So what I'm basically telling you in raw, math is basically this. Green candles don't have top wicks that often on a daily. Red candles, about 2/3 of them have bottom wicks like that. So you're not going to normally see a green day sell off. When it's challenging the band to the upside and trying to break, it's usually better to not bet that it reverses. Unless the stock ratio itself is negative, you're not betting against a bull market, you're joining the bull market. So the rare times it's interacting with the upper green band, I usually try to join in on it because green candles stay green and strong. So we long on the break because majority of green days stay like this, and the majority of days are green in a greater bull market as well. So I join a bull market as much as I can. Only 4% of days break, but when they break, they keep going. They usually break and keep going and don't sell off, or they usually go and then they hover here and hang. So green days usually do this. They don't normally hit the band and sell off. You don't usually see green top wick days that often. You can, it's very rare. But as red days usually will have big wicks at the bottom. So I long at the bottom of the band because of that probability, which is what you said, but I don't short off of that one unless I have the confluence of the stocks. I usually try to join in on it. And you'll see more often than not, it usually sticks to this upper band. And we talk about that in this actual bootcamp class. It's a great question because one could say, well, it's only 4% of days break, therefore I should short it. But the 4% of days that break usually break pretty freaking hard. And shorting is usually suicide. If the stock market is 84% of stocks are in a bull zone, there's usually not any much selling pressure at all. Like, as a matter of fact, this could be the starting point of a big rally for the rest of the day. I love that. It's a great question, right? Yeah. You're 90 years old on YouTube. Those stats aren't right. It didn't capture you in the demo numbers. Oh man. Would I go long now and NQ? Yeah. Like the whole point is that I'm trying to long off of the band and I'd be buying those dips if I had, not entered yet. Like I'm still holding on to the long. This isn't scaring me at all. Yeah. Okay. There's about to be some changes at My Funded TV, by the way. I had a meeting with the leaders yesterday and the producers. My show format is probably going to change a little bit. I'm not going to announce anything about it yet, but the time is going to be smaller. I'm going to have like less time on that show, which means our afternoon stream, I'm trying to keep it the same because you can't really get a lot. There's no, for me, for half an hour, it's not a lot. I'm still going to try to go for an hour. But the format's going to change a little bit. And I might be bringing a lot more guests on too. So for that lunch hour. Any advice on gold? Aldine, I don't really trade gold, man. So I could lie and make up something, but I'm always honest about it. It's not my strong suit. I don't really know why gold is going up. Some people believe that there's an impending crash of all crashes about to happen. They're like, the government data is a lie. The Fed's rapidly lowering rates to try to save the stock market because they know what's coming. Everybody's buying gold because they know what's coming. I've seen a lot of people saying this stuff, like stockpile some gold because we're about to hit zero in the stock market kind of thing. I don't know. I think it's just a hedge against inflation. People are not trusting that the Fed's going to curb it as quickly and that the tariffs are they're unreliable, they're changing, they're not static, and so people are just buying gold because of that. People tend to hoard and stockpile commodities in periods of high inflation because those commodities will retain their value. And I think that's really that's my only explanation. I don't know a lot more about what makes gold move because I don't study the gold markets, but in commodities in general, people tend to hoard stuff in periods of recession. It's a human thing. Doomsday preppers, they hoard food, they hoard ammo, they hoard chainsaw, kerosene, gasoline, chainsaws, whatever, to fight off the zombies. Humans like to fall back on tangible assets because they know when the dust clears, gold will still be a thing. But you don't know if the dust clears, if Apple will still be a thing, if Ford will still be a thing. Company's not a thing unless it survives. Gold will survive. So a lot of this recessionary fear, high inflation, tariff recession fear is driving price up, I feel. People line up out in Australia to buy gold. Yeah, I know, right? I feel like if the world goes to shit, we can just use bottle caps as currency like in Fallout. That'd be kind of cool. I mean, you get to choose what is a currency at that point, right? Catalyst active, not to the upside, no. There's no such thing as a well, okay, let me start over. A catalyst active sit out rule is only to the downside when markets are extraordinarily volatile. You don't want to play in them. Catalyst to the upside, the volatility is less. So you don't fear an upside move as being like a catalyst is active to the upside, sit out. Upside moves that are catalyst, quote unquote, you still want to try to join in on. Yeah, so with gold, man, I wish I had more to say, but I don't really I don't understand it because I don't trade it and I don't pay much attention to it. So my advice for what's going on is probably basic in general. It just sounds like some hoarding mentality, and plus a little hoop, like little hype. There's like a frenzy. People see it going up, they try to jump in on it, drive it up higher. The fact that there could be more tariffs coming down the pipeline, devaluation of the dollar. There's all kind of factors that make people want to value that kind of stuff. Do I treat evals as funded, or I go all in and pass them in one trade? When there's a sale, I usually brute force the evals and pass them as quick as I can. If it's a 2-day pass, I pass them in 2 days. If it's a 1-day pass, I YOLO pass them. Evals, when they're dirt cheap, I just pass as many as I can when they have the sale to stock up on them. If there's not a sale, I will trade the evals a little more seriously. It's all about the time value of your money. If you get a 1/10 of the price when there's a 90% off sale, then you can take 10 times the risk for the same overall risk for what you paid. An example is if you were to use a 90% off, which means you can buy 10 and use a martingale strategy. Market fell, you full port at a level, right? Just in one. Market fell, you full port, it blew up, full port, you blew up, full port, you blew up, full port, you blew up. And you can do that 9 times. And if the 10th one rallies and you pass, check. Then you won one account for the full price because you bought them at 90% off. So you get 10 opportunities to pass, and overall it's the same price as if there wasn't a sale to pass, to buy one, trade it seriously, and pass one. But this one took no strategy in that example. The idea is when there's a sale, can you get more value of number of passed for price you pay? And the answer is brute forcing is always the most appropriate way to go, because the markets don't just usually fall straight down and stay put. When there's a sale, you usually want to pass them as quick as you can, because for the total spent, you should get more passed. Mathematically, it's a statistical thing. Right. How do I find high volume pivots on other index futures like the FTSE or the DAX? We don't have options data for that. So unfortunately, I don't really have a mechanism or technique to be able to do that. I wish I did, but I don't. It'd be nice if I did. I thought the market was gonna be selling off from here. Should I log in one more NASDAQ? I'm gonna log in one more NASDAQ. Why the hell not? All right. I remember this number here. I'm only trading like 2 accounts at a time. All right. What's on sale right now? 40% off flash sale Tradeify, 70% off flash sale ETF, 15% off of your Rapids and 25% off Legacies at Fund and X for first-time customers only. Those are the good ones. 40% off Take Profit. Core and Scale have their Flex add-ons where you can get $3,000 and $6,000 payouts respectively, tripling the size of Core and quadrupling the size of Scale payout for the same price. Short time only. So when you pass those accounts and go to payout, your payout potential is much bigger. They blew tops up out of the water with that sale. It's pretty dope. Come on, Kim. I hate this consolidation of the band though. This could be a sell-off. I want to see it push and push and push and break. One time we went, second time we went. Resilience is staying pretty flat, which is good. I'd like to see this move a little higher. Those key pivots, NASDAQ was at 236, S&P was 56. Broken through and still hung. I don't think we lose these pivots for the day, but we'll see. Yeah. 70% off static at ETF is one of the better deals that we have. Probably the best of the deals because those are usually very expensive. Statics are the easiest to pass. So with 70% off, it makes it more palatable. I would say that's probably the best deal. The My Funded Futures is probably the second best deal. Fund and X always has a good deal. Do you give out a free trial? For the software, it's $100 for the trial for the first month, half off. Yeah, not free. Yeah, so Trade Sailor, we actually we have a cracked version of TradingView. We built our own platform using TradingView's charting library, but it's not TradingView. We just skipped a step. Instead of building our own charts, use theirs. And our stuff is powered on the back end. There's no Pine script or anything that's doing these indicators. It's all done on the server. And so we just use the charts as a display. Why is static easier? Because you don't have a drawdown that trails with you. Like an example is at your starting point with a trailing drawdown. If you make money, like with Apex, the drawdown trails with you, even if you haven't sold your profit. So say that you made 9,000 and then you lose 3,000. You still made 6,000 for the day, but you busted because this line, this blow up line follows you. That's trailing. End of the day drawdown does the same thing, except it stair steps with you. As you make more money, it moves like this. So throughout the day, it's static. Even if you're like losing money, this account isn't like, this isn't moving with the unrealized high. It moves at the realized end of the day profit. So trailing drawdown, which is like Apex and TPT Pro, is like that. End of the day accounts, 500 futures accounts, Fund and X accounts, Tradeify's growth and their funded stair step like this is called end of the day drawdown. Static is like this. Here's your blow up point, and it stays there. It never moves. So no matter what you do, make money, lose money, whatever, as long as you don't fall X dollars below the starting balance, is your blow up point. So hardest, medium hard, easiest. This puts a buffer in your account after some time. Now with the trailing drawdowns and end of the days, normally what happens is they don't necessarily move with you the whole time. A lot of the firms now, once you make it to whatever your drawdown is, like say it's $3,000, once you make that particular profit, then your trailing drawdown stops trailing. Oops, this is supposed to be flat. So the same thing here is the stair step happens past a certain point and then it stays put as well. Ultimately converting to a static after you've made a certain amount of money. So after so many trading days, you can earn a static in all of these accounts that we work with, all of these partners up here. A static, you're there from day one. That's what makes static cool, is that your first trade has a huge buffer. So if you make profit on your first day, you have this massive buffer to play with. So that way the pressures off. Like with Apex, no matter how much you make, you can't come X amount of dollars off of the high. No matter if you put 100,000 or 5,000 or whatever, it trails until you earn a static. Does the static move after you take a payout? That's a question for Kaizen if he's here. I don't know if he's here today. I don't think once you take a payout, the static moves at all. Apex is not static. They have a static account though. Apex is mostly intraday trailing drawdown. I don't like that we're rejecting DA ban this time though. I'm gonna give it like a couple more moments. Before I decide what I'm gonna do. Apex has a static, but it's twice as expensive. For 50% harder of an account. Apex, you have to go like over 3 to 1 profit target to drawdown. With ETF, it's 2 to 1, so you don't have to make as much compared to your drawdown. Hold on, I'm doing some fence stuff really quick. Come on. Trying to get some pictures because they're buying lighting right now. try something different here. Trying to get some pictures for them. Am I losing money? How's my trade doing? All right. Can I make a phone call real quick? Nope. These work for overnight trading, money gang. Yeah, so we have overnight levels. Yep. Sorry, I was on a phone call. Can I set up my rock suitor charts? Yeah, so you click this button here and you can lay out as many charts as you want on the screen. I just do side by side NASDAQ and S&P. I have a watch list off to the right that I can type in whatever tickers I want. On the connections tab at the bottom, I can connect my CQG account for my live futures data. And then I add the liquidity map indicator from the list. Once I do that, I add the resilience indicator from the list that's in here somewhere. Right there. And then I've got all of those. It's just 2 indicators. That's it. And then everything else is automated. All these little icons on the side of the screen are automated. I said 60 on ES where I would add. Yeah, that's 10 points below here. That's it. On the break, I give myself 10 points of allowed overshoot. What's the ticker for NASDAQ? Yeah, you have to actually buy the data feed, Ravi. So you can't just you have to actually connect futures data. So with us, you can get equities data that you can purchase through us, and then futures data, we don't sell futures data. You have to connect it from a broker if you want futures data as well. So we tell people like an account like AMP or something. Is NQRes bugged? No, it's moving. It's just flat. You see how it's 7.6, 7.6. It's moving. The process is still good. It's just moving slightly. You can tell by loading up the bigger chart, like the smaller chart over here. Resilience updates every 2 seconds over here. So you can see how it's moving around, it's just barely moving. You have a data feed through CQG. What broker is it from? Okay. So NASDAQ is not pulling up. Okay, I get you. Are you typing in ENQZ25? It's ENQ, not EQ. So you had a typo. Make sure you got the N in there. That should do it for you, buddy. Holy shit, I gotta do the show. I ran out of time, my bad. My fun at TV, you guys. Whoops, they're gonna be mad at me. Thank you, Kristen, I love you. Holy shit, I forgot. I'll be live on My Fun at TV today. Oh shoot, I don't even know what the crap. All right, let me give you guys a link really quick. This project has got me all.
It's trying. It's trying. Yeah.
All right, everybody, go here. Be live on My Fun at TV in a couple minutes here.